Good morning, distinguished ladies and gentlemen. I hope you all had a good night rest. Please, may we all rise for the national anthem. May be seated. His Highness Khalifa Mohammed Sanusi II, 14th Emir of Kano and former Governor Central Bank of Nigeria, Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, ably represented here by Mr. Chibuzo Efobi, Chairman, Board of Directors, Bank Directors Association of Nigeria, BDAN, Mr. Mustafa Chikeobi, I actually have a long list of dignitaries who are not here present, but the event must go on. My name is Aonduna Ingia, and I would like to welcome all delegates who are here in the Federal Capital Territory for the Bank Directors Summit 2023. Please put your hands together for yourselves. Well, as you can see, we are way behind schedule, and as our guests come in, or our dignitaries come in, I'll recognize them and we'll move on. But at this point in time, ladies and gentlemen, it's my honor and privilege to call on the podium the Chairman, Board of Directors, Bank Directors Association of Nigeria, Mr. Mustafa Chikeobi, for his opening remarks. Please put your hands together for him.
Good morning, and thanks for making time to attend this summit. I can see, and many of you can see, that I wish there were more people here today, but this is our first attempt at raising the profile of Bank Directors Association of Nigeria. It has had a low profile for a long time, and I hope that the profile will rise. The reason why I think this is important is because the Board of Directors, as our guest speaker will tell all of us, is the height of governance of banking institutions. And I think that it's also, therefore, a good platform to advocate for the interest of the banks, to make sure the banks are doing the right thing, and to make sure that the banks are a willing partner to the government's efforts. I had said last week on a TV program that I would give a response to the speeches by the governor of the central bank and the CME who will be joining us later, because they had made some remarks at the CIBN dinner. My summary of the speeches made by both of them, and from what we've heard from this government, is that this is a government that wants growth and reforms. So our response to the growth and response agenda is very, very brief. The banks will be willing and able and eager to partner with the government on this agenda of growth and reform. We will work with you. We will happily work with you. Banks have a role to play, and the role is a central one. But we have 3 minor asks of this government and any other authorities. 1, please consult with us. The era of regulations without consultation should end. We're partners. If you consult with us, we'll tell you how to accomplish your objectives in a smoother, cleaner fashion. To this end, I call on the Central Bank of Nigeria humbly to institute, I would say, twice-a-year meetings with the chairman of banks. I know the CBN has regular meetings with the CEOs through Bankers Committee, but I think that it will be helpful if there's a formal dialogue with the chairman of banks twice a year. I think it will help. But again, that's an ask, and you're the regulators, and you can decide to take it or not. The second ask I have is a little bit more complex, and it is ironic that I'm the one asking, and His Royal Highness is here listening. That is the issue of the AMCON and NDIC levy. It has now become the second largest operating expense of banks, second to wages and salaries. And it has the potential of becoming the number 1. It's not sustainable, because all banks do is banks transfer these costs to their customers. And it shows up in fees and interest rates, lending rates. It's subtle, but it's there. I will have to pause and recognize the entrance of Mr. Olawale Edun, who is representing the President today, and who, by himself, is the CME, Coordinating Minister of the Economy, Minister of Finance. So he's wearing 2 hats today. I'm glad he walked in when I was talking about the AMCON levy. The AMCON levy and the NDIC levy is a discussion that must be had. It's a difficult conversation. The banks are willing to pay, but there has to be some resolution. It can be in many, many ways. Maybe there's a cap on it. Maybe there has to be some resolution to it. So I plead with the CME, the Presidency, and CBN to look into this levy, because it will eventually become unsustainable. The third ask is a general one. I'm a pensioner, and many people here are pensioners. I noticed that the pension funds, because either by choice or by regulation, have to invest in government securities, which are yielding way below inflation. At the rate we're going, 10 years from now, the purchasing power of a pensioner will be 50% of what it is today. And I think that will create, it's one of those gently rising problems. And I think that we should look into how to make our pension funds yield something more in line with inflation. Otherwise, pensioners will have a tough time 10, 20 years from now. So those are the asks we have, but like I said earlier, the summary of the banking industry, as represented by BDAN, is that we're willing, able, and eager to work with the government on its growth and reform objectives. Thank you so much. I also noticed that the representative of the Vice President is here. You're welcome, Dr. Fasua. On that note, thanks for attending. I hope you have a wonderful deliberations. Thank you.
Please put your hands together for him once more. I have a sense that this summit is definitely going to be an engaging one and a robust one, to say the least. I'd also still like to very quickly acknowledge the presence of the Honorable Minister of Finance and the Coordinating Minister of the Economy, Mr. Wale Edun, who is here to represent the Excellency President of the Federal Republic of Nigeria, Commander-in-Chief of the Armed Forces, Senator Bola Ahmed Tinubu. Please put your hands together for him. Let me also acknowledge the presence of the Special Advisor on Economic Matters, Vice President's Office, Dr. Tokwe Faswa. He's here to represent the Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima, GCON. Please put your hands together for him. Well, the chairman has set the ball rolling this morning, and I don't know about you, but I'm indeed looking forward to a robust engagement this morning. At this juncture, and with the greatest respect, I'd like to invite to the podium His Highness Khalifa Mohammed Sanusi II, the 14th Emir of Kano and former Governor of Central Bank of Nigeria, for his remark. Please put your hands together for him as he steps forward.
Please permit me to recognize the Coordinating Minister of the Economy and Finance Minister, my brother Wale Edun, Chairman of BIDAN, bank CEOs, bank directors. It's a great pleasure for me to have the opportunity to speak for a few minutes at this summit. And as you can see, Mustafa Chikeobi decided to provoke me by talking about the AMCON levy. And I know he wants a reply. And the reply is, I do not support its removal. And I think it's important that maybe it's a good starting point around regulation. And it's important, and he knows, but it's important to keep reminding the country as to why we put in that levy in the first place. In the 2008 financial crisis, we had to bail out a number of banks. A lot of money was put in to clear non-performing loans. A lot of money was put in to recapitalize those banks. And the question we had to face was, for how long would the taxpayer continue bearing the burden for the irresponsibility of Nigerian banks? Now, there was a huge debate at that time. There were banks who said, we managed ourselves well. Why should we pay for the bad behavior of Intercontinental and Oceanic and so on? And our view in the central bank was, if we had not bailed out those banks, all of you would have gone under, because the contagion risk would not have allowed the system to survive. Now, the central bank also accepted responsibility and committed to put in, I think, 50 billion naira every year. And we said we would recoup the cost of the banking sector recapitalization and reform from the entire banking industry. And it's about collective responsibility. We all have to start learning that when our colleagues misbehave, we need to call them to order. Otherwise, we are going to pay a price. Now, that was a unique thing. And I think, look, if you take it off the banks, you're going to have the taxpayers pay anyway. Somebody has to pay. Central bank is paying. The banks are paying. We share the costs of the crisis. You guys want to get it off your books? Why don't you just get together, find out how much you owe the system, and pay one time and get it out of the way? So I would not advise the central bank to take it off, and I'm sure Sarah would not, and I'm sure MK Ahmed would not, and I'm sure the finance minister would not. So it's one of the, so let's get that out of the way. Let me save. Now, I'm supposed to speak about regulation and compliance, which is, I don't understand what this topic means, by the way, but I'm going to say a few things. But while we're on this, I think it's important to also talk about current conversations. And there's an ongoing conversation that seems to have started in the National Assembly about people trying to amend the Central Bank Act. Let me add my voice to those who have said there is nothing wrong with the Central Bank of Nigeria Act. There is nothing wrong with BOFIA. The CBN Act is one of the best central banking laws in the world. In fact, when we reviewed central bank laws, the only law that we saw that we would have learned a few things from was the law setting up the Bank Negara Malaysia. Now, if people who are supposed to implement a law do not implement it, the solution is not to change the law. And this reaction is a knee-jerk reaction. If you take away the independence of the central bank, if you bring it under political control, you hurt the system, and long-term, you are institutionalizing the lack of autonomy. The reality is you have an independent, autonomous central bank whose independence was undermined by a combination of politicians and central bank actors. It is time to go back to what the central bank is supposed to be and implement the law. So I'll give you an example. People talk about Ways and Means. Ways and Means only happened because all along the line, all the checks and balances collapsed. When the National Assembly talks about Ways and Means, the question is, where were the oversight committees of the National Assembly? When they did the law, they said very clearly that the central bank can only lend to the federal government if the federal government has no money of its own, and that when you lend up to 5% of previous year's revenue, and once you reach that limit, the power of the governor to lend money to the government is extinguished. If you want to change it from 5% to 10% or 15%, you go and amend the law. You don't ask the central bank governor to break the law. But if the central bank has broken it, you had a National Assembly. The reason you have the protection for the governor of the bank is exactly so he can say no. We were all asked when we were governors to bring money, and Sarah knows there was a day I was called by the finance minister, and she wanted us to, they needed 100 billion. And she called me and said she had spoken to Tunde Lemo, and he said he should speak to me. She should speak to me. And I said, why? He said, you have reached your limit. We have reached our limit. He said, so what do you want me to do? Break the law? And at the end, we just agreed that, look, we've done our interim audit. We know how much we are going to pay you as dividend this year. We can give you an interim dividend. Sarah is there. And we agreed to give them an interim dividend, part of their surplus in advance. Okay? The finance minister understood that this is the law. The central bank governor is not supposed to break it. And there was a reason for that law. We had a conversation. We found a solution that did not break the law. There is absolutely nothing wrong with that act. The law, if the central bank had kept within that limit, we will not have inflation where we have it, we will not have exchange rates where we have it, we will not have these problems. And the reality is, I have been talking about this since 2015. I first raised an alarm when Ways and Means was 4.7 trillion in December 2015. Civil society, where were they? The press. I mean, everything we're complaining about today is something that every economist would have told you would happen. I know, as I was saying yesterday, the president said we were pursuing unorthodox policies. When he said it, I laughed. Those are not what you call unorthodox policies. There are policies pursued by Idi Amin in Uganda, by Mugabe in Zimbabwe, by Chavez in Venezuela. They're policies, we have seen them happen. It's very easy. Once you print money, you know where you're going to end up. And by the way, it's not just Nigeria. The crisis you had in the US with Silicon Valley Bank is a result of too much money in the system. 15 years, the Federal Reserve has been pumping money into the system. First, counter-cyclically after the crisis, second after COVID. And what is the result? Silicon Valley Bank, Signature Bank, First Republic Bank. Between them, those three banks had total assets of $522 billion just this year. And they failed. And then after that, you had Credit Suisse. And when you think that the largest bank failure in US history, Old Mutual, was $320 billion, and that was what triggered the world, the financial crisis of 2008. Imagine what has happened in 2023. $522 billion, three banks. And that's why when we talk about regulation, we've got to remember that banking as an industry is inherently risky. And there are many reasons why it has to be regulated. I was speaking yesterday at the Financial Markets Leaders Association. And I said it's important to look at the difference between what happened in 2008 and what happened in 2023 with the banks. And when you look at those two, you also begin to understand the importance of regulation. In 2008, the biggest problem was credit risk. The banks, again, had a lot of money, and then they went and started having all these collateralized debt obligations, subprime mortgages, all sorts of toxic assets. And when the credit went bad, those banks went bottom up. It was credit risk. With Silicon Valley, it was the opposite problem. The Silicon Valley Bank had billions of dollars in treasury bills. The Federal Reserve has been pumping money. If you look at, well, let's start with the regulation. 2008, the United States passed a law, the Frank-Dodd Act. We all know the Frank-Dodd Act. Part of Frank-Dodd required all banks with assets of $50 billion and above to subject themselves to a stress test by the Federal Reserve every year. What happened? After some time, you know, the thing with crisis, when it happens, we all panic. After some time, we forget. the Americans started saying there was too much regulation. Donald Trump, the Republicans, banks were being constrained, there were too much capital requirements, these stress tests were too much of a problem, and the US Congress, against the advice of the Congressional Budget Office, amended the act. They actually passed a law called the Economic Growth, Regulation Relief and Consumer Protection Act in 2018. Listen, a law called regulatory relief. That was Trump. And one of the conditions of that law was that the threshold for the stress test should be raised from 50 billion to 250 billion. The Congressional Budget Office said this increases the risk of banks with assets of 100 to 250 billion collapsing. They did not listen to them. And that was what happened to SVP. If Silicon Valley Bank had been under Frank Dodd and doing stress tests when they reached 50 billion, what happened would not have happened. How did SVB fail? Between 2020 and 2022, as a result of loose money, total assets of that bank increased from about $57 billion to over $200 billion in 2 years. From 70 billion to over 200 billion. They had nothing to do with the money. They couldn't build their credit portfolio. They went and purchased US Treasury bills. Their bill holdings increased from 27 billion to $127 billion in 1 year. Silicon Valley Bank did not collapse because it had bad loans. Inflation hit America. Interest rates went up. The value of those liquid assets crashed. It had a liquidity event, sold off $21 billion in T-bills and took a hit of $2 billion. 1.8. Which is why we need to ask ourselves now in Nigeria, we've had 8 years of easy money. Sorry, I think I need to switch this off. You know, this is what I like about my new job. When I was governor of Central Bank, I didn't have all these people around me, so I know you bankers are all jealous. So hopefully, when you finish, you'll end up being a traditional ruler and have this. You know, so in 2000 it was credit risk. But I mean, you begin to think, what can be safer than US Treasury bills? And yet, Silicon Valley collapsed because it had too much of US Treasuries. It was carrying huge interest rate risk. It was a market risk. Once the interest rates went up and the value of those assets went down, it had a short liquidity spurt, and that was it. And that was the beginning of the run. And it led to the collapse of the other two banks. If this tells us anything, it is that when people begin to complain about too much regulation, they need to think what happened when regulation was rolled back in America. They need to think of Silicon Valley Bank, First Republic, Signature. Which is not to say that regulations cannot change. Regulations are dynamic and they keep changing. New risks emerge. And to be honest, you bank directors are the very first line in regulation. And what regulators need to do is focus more on making sure that banks are well managed and that banks understand the risks that they run. We keep telling bankers, you know, banking is a business like no other. It is the only business where people will come and carry their entire wealth and give you based on trust. You don't give them any collateral. Set up any kind of industry and you want to borrow $1 billion or $2 billion, you need collateral. The banks, you're borrowing money, trillions and trillions of naira without giving anybody collateral. The only thing that you have is that the central bank licensed you and the public trusts you. That is the only collateral that you have. It's your integrity, it is a trust. When a banking system begins to operate in a manner where the public does not trust it, that system will collapse. Trust is the foundation of banking, which is why when we're in the bank, if there was any question about the integrity of you don't have to steal money. Once your integrity is questioned, you are dismissed. And this is the reason, because the entire system collapses once trust fails. If you lie to a customer, if you deceive a customer, if you have a problem with reconciliation and cover it up, you go. Not termination, not suspension, dismissal. Because bankers are supposed to be trustworthy. That's why people give you money. Now, regulations are one thing, of course. The actual doing of regulation is another thing. When I came to the central bank, I used to tell banking supervision that, for years as a credit officer, I received bank examiners. But as a risk manager, as a chief risk officer, I don't think the regulators asked me the questions they were supposed to be asking me. Focus on looking at the loan book and seeing which ones are non-performing loans. By the time a loan is non-performing, it is too late. We need to focus more on how do you stop loans from going bad. You need to start asking banks, what are the risks that you run? How do you assess your macro risk? What is the board doing? What kind of reports does the board get? You have your credit risks. Have you identified them? How do you choose your credit portfolio? How do you select your industries? Look at your product programs. What are the operational risks in those products? What are the market risks in those products? The quality of people who are running your risk management. The operational controls you have around your technology. By the time we focus more on what the board is doing, what the processes are, what the policies are, you then have the result. The result follows. But once we wait until banks book any kind of loans, operate in any kind of industry, and then at the end of the day we just come and calculate this is substandard, this is doubtful, this is lost, it does not change the fact that the bank will fail. Therefore, the quality of risk management is something that we need to be focused on in our regulations. Set the guidelines and follow that. And that's why I agree with Mustafa on his suggestion of meetings with bank directors or chairmen to consult, yes, but to also ask them what they're doing, to assess how much the board knows, how much governance the board is actually doing. And believe me, we have had cases where bank management controlled the board. When we went, and I've said this before, and it's public information, we had a bank where the bank CEO took a loan approval to the board. The board declined it, and she came down to her office and approved it that same day and disbursed. She overruled the board, and nothing happened. Because she had picked every board member and appointed the board member, and she owned the bank, or she believed she owned the bank. Is that still happening? I don't know. And these are the kinds of things we need to look at. And this is your role as board directors. because that is the first line of defense before the central bank. So personally, I think that we're at a time when we can look at the regulations, but all regulations that are aimed at strengthening risk management and governance should be given priority. And there should be a lot of delegation. We need to, and that conversation helps. Regular conversation with the board, regular conversation with the management. So I'll give an example. Today, we are going through difficult times. The central bank has to take decisions to walk back from 8 years of loose money. Central bank has started tightening. Absolutely necessary, because if the central bank is to focus on its role of providing stability, because that's what the central bank is supposed to do. We used to debate with Sarah what the exact meaning of price stability conducive to growth. You know? That was the job of central bank. The central bank is not to create growth. It's to create an environment that is conducive to growth. It is not the finance ministry. It is not the one doing structural policies. Now, when the central bank returns to that role, now they've got to tighten money, because for 8 years, we've had situations where it's like driving behind a driver who trafficates left and then turns right. You have every MPC meeting and there's an announcement of an increase in MPR, and then the next day, Ways and Means is pumped into the system. So you say you're tightening money, but you are actually loosening money. Now the central bank has started tightening. And we're seeing month-on-month inflation figures go down. Exchange rate needs to be stabilized. I'm happy CME is here. I'm appealing to CME to please hurry and bring the $7 billion to the CBN, $10 billion, because that was promised at NESG. We are going to hold you to that. Because in the short term, we need to stop the hemorrhage. To stop that hemorrhage, we need liquidity in the market. And I keep saying, if you asked me before this started, if I were governor, what would I do to stabilize the currency? I would do exactly what the central bank is doing. Pay back the past dues, get liquidity into the market, and tighten money. That's all. But that's a short-term solution. And it will get us over the next year or two, and we can stabilize. And frankly, I think the Naira is where it should be, about 800. That's a real effective exchange rate. What we need to do is close the gap between the official and the BDC rates. However, after 1 or 2 years, the CME, we still have to pay back that money. And we have to address the fundamental question: why is there no money coming in? Why is NMPC not able to bring in dollars? I'm sorry, this is the question that cost me my job. I will continue asking this question until NMPC is fixed or until I die. Where are the dollars? We need to shine light on NMPC. The finance minister cannot tell you, because he doesn't have a metering system that reports to him. The finance minister cannot tell you that today, this is how many barrels of oil that we produce and exported. You can only rely on NMPC telling him. Those barrels are revenue. They belong to finance. We've been talking about this for 10 years. We need a metering system. The finance ministry needs to know how much oil we are producing every day, how much oil we are selling, and where the money is going. Because if you don't fix the leakages in that system, if you don't fix the revenue, the dollar revenue issue, you will never fix the exchange rate problem. Oil is not going to grow our GDP. I've always said that. Oil, I mean, if you took out all the oil in Nigeria today and sold it, it would raise our per capita income to maybe $4,000. We won't even be a middle income country. Oil will never make us rich, but it is working capital. It is working capital. It is a lubricant for our import dependent economy. And we cannot afford to continue producing the oil and not seeing the revenue. We are no longer paying subsidies. So where are the dollars? Before it was under recovery. Now we don't have under recovery. Where is the money? It was the issue I raised for which I was suspended. You can suspend me again. Okay? But it is an issue that this country must address. NNPC is the most opaque oil company in the world. When I was in the central bank for 15 years, they had not been audited. So, you know, the central bank is easy to attack. But the central bank does not manufacture dollars. It's not an exporter. It produces naira. It can buy dollars. Now, there are things that are not NNPC's fault, or that could, but things that could have been done better. We're producing a lot of our crude oil offshore. Deep offshore production, PSC agreements mean we get only 40% of that. It was 20% before. So if you produce 1 million barrels deep offshore, you get only 400,000 barrels. We could increase the onshore production. But what have we done? The IOEs went out and we signed all these SAAs with our cronies and our friends. We need to review. Those who are producing onshore oil, where we have the highest, these are wells that have been in production for 7 decades. They are mature fields. At this time, you need international oil companies, not Shell, not Exxon. You've got medium-sized IOCs operating in places like Gabon, in places like Latin America, in places like Asia. Get them to come and maximize the output from those fields, because that is where the government has the highest revenue stake. We can't just have Shell step out and then I take my friend Mustafa Chikiobi and co, who has never been in oil production, and then give him the license and say, come and produce oil, and expect to get revenue. We need to revoke those things and give people who can bring in the technology and the skills to sweat those, because you need to have a long-term solution to this problem. Plus other structural changes, moving to alternative energy. CNG vehicles would save you 60% on PMS. Convert 3 million vehicles and see what happens to inflation. See what happens to your foreign reserves. So I get worried because while the central bank certainly has done a lot of things wrong in the last 8 years, there has been so much attention on the CBN, and we are not looking at other people who may have even done worse. We paid 11 trillion naira in fuel subsidy. There's no accountability up to now. The National Assembly called NNPC to bring the documents. They refused. And by the way, let me advise that this idea of the president being petroleum minister is not a good idea. The last president was Minister of Petroleum for 8 years. When I was governor of Central Bank, we had a petroleum minister. So when I talked about NNPC, I could attack Dizani. Now nobody can talk about petroleum because 8 years, if you talk, you're attacking the president. We need that buffer. Somebody has to be there. So a minister has to be there who is held accountable by Nigerians. I say this because if we're talking about banking, if we're talking about the banking system, if we're talking about the economy, we've got to look at all these linkages. And this excess focus on banks, on regulation, and all that, it's important, but we also have to look at transparency and regulation in other areas. Okay, so what are the risks that you run today as the central bank tightens money? please look at your portfolios. My fear is that if a bank is going to go down at this time, it will not be credit risk, but it could be market risk. And we need to have a stress test on the banking industry. And this is where the directors come in. We need to have stress tests and a conversation between the central bank and the directors. And the purpose of these tests is not to punish anybody or investigate anybody. It is to understand which banks are at risk and what steps need to be taken to protect them in the event of a shock. If you've had years of lose money, I know up to a few weeks ago, I don't know those of you in the market, treasury bill rates were 3%, right? Bond rates were very low. How much of those low yielding assets are banks holding, and what is the value of those assets now that interest rates have gone up? And if you need to sell them off, if you have a liquidity event, how much loss would you take, and do you have enough capital? The banks that are net positive in dollars have been reporting billions and billions of profit. The markets are happy. Well, how about the banks that are net takers of dollars? Do they have the capital to absorb the losses from the huge devaluation? And I'm happy that the central bank has come out to advise or maybe direct that these extra billions you're getting from revaluation of your dollar holdings, don't rush into paying them off as dividends. I know the capital market is probably not happy. They were busy, they were salivating, you know, but that was exactly the right thing to do. I was very happy to see that circular. It's exactly the right thing to do. If you pay that off now as dividend, what happens if you have a revaluation? Do you claw it back? Because these are unrealized gains. So these are the kinds of proactive things we need to do. But I think the way the Bankers Committee operates, or at least the way it operated with the strategy meetings annually, with the regular conversation, regulations are formed in consultation anyway. Because frankly, all the regulations that came out, at least in my time, came out as a result of those meetings, those conversations. And to the best of my understanding, every time the central bank issues a regulation, it sends out an exposure draft. And you all have a chance to speak to it, to respond. So what I would like us to do is, let us never get to a mindset where we think regulation is a problem. It is not. You know, we are in an industry, the nature of banking is that you only make money through maturity transformation. That is the basis for your profits. And if today, there is no bank in the world that would survive if everybody who has money in the bank and who can take it today, if they say they want their money today, that bank goes under. No bank in the world will survive. And that's why you are on a constant precipice. You know, you've got to constantly monitor that risk. And once one big bank gets it, today you hear First Bank or GT or Fidelity, once it gets hit, the contagion happens. The final point I would like to make on regulation, there is this ongoing conversation as to whether the central bank should continue to be the regulator of the banks and the supervisor, or should just focus on monetary policy, and whether it should create an FSA kind of thing. Look, even the British who created FSA discovered later that it was not working where the banking system is concerned. There's one reason why the central bank has to continue to supervise banks. The central bank is the lender of last resort. If the central bank is going to fund the bank and bail out the bank, the central bank has to supervise the bank. You want to create an FSA and put pensions and insurance and other regulators, that's fine. But so long as the central bank is the lender of last resort to banks, if I were the governor of the central bank, I would fight tooth and nail to keep banking supervision and regulation in the CBN, unless you are going to find funding for the banks if they go under from somewhere else. So these are conversations I think that we need to have. And I think as bank directors, you need to join this conversation. I'm happy the CME is here. The CME understands that it is in the best interest of the economy to have an independent, autonomous central bank, okay, running monetary policy, complying with the law. There is no tension. You know, sometimes you have productive tension, but there is no conflict at all. There is no competition between finance and central bank. But politicians should not be allowed to have a knee-jerk reaction. The National Assembly should explain to us what it was doing for 8 years with these ways and means before it starts amending the CBN Act. So if there's one thing I leave you with, or if there are a few things I leave you with today, is that one, the solution to your issues is not light regulation, but it's regulation that focuses on getting you to do the right thing. You as directors are the first line regulators. Actually, if the central bank comes and finds things wrong with the bank, it's an indictment of the board. Before the central bank examiner comes, the board should have taken it. So, I mean, small things. Who does your chief risk officer report to? What is your board audit committee doing? Because your chief internal auditor is supposed to report to the board audit committee. Long before the central bank comes, you people should be able to get the issues. And the way the CBN operates is, if you as chairman go to the central bank and say, CBN, we have a problem. This is what we have discovered. The central bank would work with you to fix the problem. If you cover it up and the central bank finds it, then you are part of the problem, not the solution. And this is, I think, where directors need to have that mindset. You need to see yourselves more as representatives of the regulator. I know you're representing shareholders, but remember that your shareholders own only 10% of the money you are trading with. Your capital adequacy ratios are 10%, 12%, 14%. Where is the rest of the money coming from? They're coming from depositors. While you are protecting your shareholders, you must remember that the central bank is protecting those depositors. And you must protect the depositors first, and then make as much profit as you can while keeping that money safe. Once the central bank understands that the board has this mindset, you don't have a problem. You don't. My understanding of, if they understand they've got good risk management, good audit, a good board, when they come, they will take your word for it. So this is the nature. It's a two-way process. And I think I want to leave that with us. I think we should not allow a tampering. Minister, please, I want you to please help us support. They should not tamper with the CBN Act and BOFIA. Instead, we should just ask what went wrong and how do we make sure we do not go back to that. Central bank should continue to supervise and regulate banks. And hopefully, if we do the stress tests, we'll find that there's nothing wrong, and if we find that there's a risk, we'll take the steps needed to make sure we do not have an SVB situation on our heads. And still, the $7 to $10 billion for stabilizing the market from Minister Wale Edu. We're waiting for that check, and NMPC. to begin to bring money into the market. So these are my, I don't know if this is what you wanted or what you got, but I can't be restricted into to something. Thank you very much.
All right, thank you. Thank you very much. Please, may I ask His Highness to please remain on the podium. I'd also like to invite the Chairman, Board of Directors, Mr. Mustafa, to join His Highness on stage for the presentation of a plaque. Please put your hands together for him. Please may all board members join us on the podium. Board members of BDAN. BDAN board members, join us on stage for a group photograph. Quickly, please. Yes, and the minister, please. The Honorable Minister of Finance, thank you very much. Please, Dr. Tokwe Faswa, please join us on stage as well. And the CBN representative, please join us on stage. All right, thank you very much. Please put your hands together as they make their way to their seats. Thank you very much. Distinguished ladies and gentlemen, you know as well as I do that whenever His Highness Khalifa Mohammed Sanusi II speaks on national issues, particularly in the financial sector, a whole lot of questions and a whole lot of issues are raised. And I cannot wait for some of the responses we're going to be getting here this morning. I also like to quickly acknowledge all delegates who are joining us virtually. Thank God for technology. For those of you who are joining us, you're welcome to the Bank Directors Summit 2023. On that note, ladies and gentlemen, I'd like to invite the representative of the Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, Dr. Chibuzo FOB, for his remark. Please put your hands together for him as he makes his way to the podium.
Good morning. First of all, permit me to stand on the existing protocols and also to extend the apologies of the governor and the deputy governor. At least the deputy governor planned to be here today with us. Unfortunately, there's a meeting of the Committee of Governors. Something came up yesterday, and they're all meeting as we speak. I've been asked to deliver this message or the remarks on behalf of the CBN. My name is Chibuzo FOB, Director of Payment System Management Department of the Central Bank of Nigeria. And the remarks goes thus. I am delighted to join you at this 2023 edition of the Bank Directors Summit. I must commend the Bank Directors Association of Nigeria, BDAN, and their partners for this unique and important conference. Indeed, an assembly of critical stakeholders in one room to deliberate on this topical theme is a crucial part of concerted efforts towards bolstering the resilience of banking institutions. Let me begin the remarks today by charging us all that the responsibility for achieving the balance that we all seek rests upon us all. We all have witnessed, like the rest of the world, the transformational changes to banking business, especially with the emergence of the completely digitally driven market, where customers expect quick access to financial services and banking solutions on the go from their handheld devices. As important as it is for banks to embrace digital transformation to remain competitive and meet the evolving needs of their customers, regulation to ensure fair conduct and competition in the industry is an imperative. In fast-paced sectors such as financial services and in the wake of transformational digital economy, achieving the balance between regulation and compliance is a dilemma for emerging economies. While regulation is constantly seeking to be agile and speedy, compliance thrives on cost efficiency and is not blind to opportunities and business growth. Notwithstanding which side of the dilemma one is faced with, values, beliefs, and norms are key elements to navigating equilibrium between the two. A few theoretical approaches define regulation in the context of an act or set of rules seeking to control something. Regulations have commonly been interpreted as rules or orders by an official authority seeking to limit, steer, or control certain processes and social behavior. For us bankers, regulations are typically directives on different areas issued by an appropriate authority, primarily the Central Bank of Nigeria, to regulated entities to engender compliance and to promote a safe, sound, and stable financial system. It is therefore pertinent that before I delve into how to navigate the dilemma posed, I should first underscore why regulation is important, and thereafter highlight the role which compliance plays in achieving stability of the financial system. The purpose of regulation is to ensure an enabling regime or environment, including market conduct, for businesses to thrive. When there are regulatory measures to influence operations in any industry, the banking industry inclusive, misconduct should not be tolerated, as it negates the promotion of its safety and soundness. Today's banks, as we know, must operate in a safe and prudent manner, and the regulatory and supervisory framework needs to counteract any distortions introduced by information asymmetry or breaches to established regulations. This needs a consistent set of requirements governing accounting, asset valuation, supervisory reporting, and public disclosures, risk-taking and risk management, and entry and exit. Given the peculiarities of our industry and the role of banks as custodians of depositors' funds, regulations are thus necessary when deciding who should be allowed to participate in the banking sector. The nature of oversight and responsibility these institutions should demonstrate, the prudential requirements that should be imposed to curb excessive risk-taking, supervisory standards that should be applied by all regulated entities, and uniform rules for exit. Let us begin with entry controls. The banking industry is getting more sophisticated and specialized, particularly with the advent of fintechs in the payment system. As is done in other climes, it is crucial to ensure that only fit and proper persons are allowed to hold banking licenses. The licensing regime of the banking industry, and indeed for all financial institutions, is the gatekeeper of the industry, and regulation is the tool that is used to ensure the objectives of the licensing regimes are met. An effective licensing regime is one that regulates industries and professions, ensuring that promoters, operators, and investors meet established standards for competence and market conduct to engender discipline. Consequently, Established licensing institutions are thus pivotal because it serves as a framework that governs the grant of permission or approval to a person or entity to participate in activities permitted by the license it holds. It's important at this onboarding stage for regulations to be simple and tailored to foster financial innovation. Regulations at the licensing stage must be crafted to ensure fair competition and protection of the rights of all stakeholders. In the banking subsector, licensing is instrumental in safeguarding money deposited by customers by ensuring that only trustworthy and professional businesses provide such services. Licensing regulations would clearly stipulate operational and financial requirements to be met prior to authorization to operate. Such requirements include capital requirement, which is the barest minimum regulatory capital that each institution must deposit with the CBN prior to commencement of operations. Once licensed, the entity, therefore, agrees to comply with all regulations issued by the CBN and pertaining to the category of license granted. Some of the regulations that then become relevant post-licensing include prudential guidelines, corporate governance policies, approved persons regime, competency framework, supervisory frameworks, etc., etc. Prudential regulations and regulatory structures influence market post-licensing abilities and for the regulator to monitor the banking firm's activities, reduce the likelihood that individual banks will fail, and trigger systemic failures. Prudential regulations cover liquidity or loan portfolio diversification standards, limitations on a bank's investment portfolio or lines of business, and other restrictions intended to limit the type of risk which a banking firm may undertake. In doing so, the regulator, in this case, the Apex Bank, must be aware and should consider the impact its regulation may have on the opportunities open to the institutions to grow and improve. However, the globalization of credit, foreign exchange, and securities markets have elevated globally tangential regulations such as corporate governance, cybersecurity, consumer protection, data protection, and AML to become relevant in banking business. Looking ahead for the industry and to ensure future-ready boards, banks are enjoined to reassess their banking frameworks to ensure that the requirements are effectively integrated into their business models and operations. The usual challenge that may arise when trying to balance regulation and compliance is the cost of compliance by the regulated entity. Quantifying firms' compliance costs of regulation differs across the industry and even across license categories. While there will always be a dichotomy amongst operators in one category of license, regulation cannot be segregated across organizations holding the same license. One thing is clear: the cost of compliance is a heavy burden. Regulated entities, as of necessity, will make investments of varying degrees to comply with industry regulations. For example, cybersecurity investment by banks is inevitable, given that the threats to their system and the huge impact on the institution and the entire network should such an attack be successfully launched. Complying regulation is becoming increasingly complex as it now cuts across several functions. Compliance in modern-day banking has transcended beyond the role of an executive compliance or chief compliance officer. It even encompasses the compliance costs arising from other senior management functions, such as the chief risk officer, chief finance officer, chief technology officer, etc., etc., whose roles have critical parts to play in the planning and implementation of regulatory compliance. Each of these roles seeks to improve regulatory productivity, and in this instance, it means to meet compliance requirements at lower costs. And many are looking at emerging technologies for transformation. For this reason, in developing the regulations discussed above, policymakers have moved away from one-size-fits-all approach, but rather consider the activities of the institution and the risk it carries. When seeking to understand if there is an answer to the rising cost of compliance. Ensuing regulatory productivity and soundness of the sector come readily to mind. Ideally, policymakers and regulators are looking for banks to not only meet new regulatory requirements, but to ensure the effectiveness of all that has already been established. Regulatory productivity and its derived benefits, we can assure you, far outweighs the penalties and sanctions for infractions and non-compliance. As I ponder more on the theme of this summit, I see merit and acknowledge that it will be visionary and transformational to rethink how we design, develop, and implement regulations to continue encouraging growth and innovation in banking, which is essential to achieving transformative adaptation. It will be interesting to hear the great ideas that will emerge to break the barriers and costs of compliance that may have impacted the industry for so long. Such transformative ideas need to be harnessed and shared for the benefit of the sector, and a summit such as this, with transformational board leaders, will certainly yield useful learnings. Permit me to end, as I started, with a charge to all participants at this summit. Now is the time to demonstrate transformational leadership to deliver strategic outcomes in our respective institutions. Transformation is much more than change. It requires us to be disconnected from the old mindsets while delivering a shared vision that someday our banking industry and indeed the entire financial system will be self-regulated. Finally, let me again commend the organizers of this summit for the time and effort put in. I am confident that the resources and experience assembled here will contribute sound and knowledgeable discussions on the theme, which I thought is very apt in today's modern banking world. I must also thank you all for the support and commitment to transform the Nigerian banking sector. I wish you all very fruitful conversations. Thank you.
Thank you very much. Thank you very much. Please put your hands together for him as he makes his way to his seat. Thank you, sir. Your Excellencies, distinguished ladies and gentlemen, taking us further this morning into this engagement, it is my honor and privilege to invite to the podium the Honorable Minister of Finance and Coordinating Minister of the Economy. He is here playing two roles, a dual role, as the representative of the President of the Federal Republic of Nigeria and, of course, as the Minister. Please put your hands together for him.
Thank you very much, and good morning. His Excellency, the Special Guest of Honor and Vice President, Federal Republic of Nigeria, Vice President Kashim Shettima, the Chairman, BDAN, Bank Directors Association of Nigeria, Mustafa Chikeubi, the other special guest of honor, His Highness Muhammad Sanusi. Second, the 14th Emir of Kano, the Alifa Tijaniya, and of course, former Governor, Central Bank of Nigeria, directors of BIDAN, bank directors here present, distinguished ladies and gentlemen. First of all, let me just say that as the representative of Mr. President, I cannot be late. Don't report that I was late. I was late as the Minister of Finance and Coordinating Minister of the Economy. Because in that role, I was at the ECOWAS summit, where I also have a quite important role to play. I'm happy and honored to be here to celebrate with BIDAN and to be part of this occasion. You've been going since 1989, and of course, your aim is to improve the banking system through integrity and high standards. Now, Mustafa Chike-Obi and I, we virtually started our professional lives, I think, in the same week, if not on the same day, at the same institution. So we go way back. So I had no choice, no matter the conflicts, but to accept to be here today. However, it gave me two issues to ponder. And since Mustafa Chike-Obi and the Chike-Obis are known for mathematics, I looked at it in terms of a simultaneous equation. First of all, I needed to attend. And I needed to speak. He said I wouldn't, but I knew. Whether it's opening remarks or goodwill, I would have to speak. But then I saw that His Highness would be here. And if I may refer to him as we used to in the banking terms, as Sanusi Lamido Sanusi SLS. We all know what it is when you give him a microphone. He's my friend though, he's my brother. But so I knew that I would have the constraint of making sure that I don't make any policy statement that he will feel obliged to disagree with, to debunk, and to generally make the kind of headlines that he's used to making with. And so, in order to escape the risk of being part of what he is used to, and I think you already have your headlines for tomorrow anyway, you don't need any more. So I'll stick to my script, if I may, which is, it lacks the fireworks that come with SLS when he speaks. But I think it's still worthwhile. However, I cannot fail to say this. It's an important conversation that we are having, and His Highness has raised important issues. What I will say is that I can't say that any one of them is new or is not being, it hasn't been recognized and is not being given due attention. All that he had to say from regulation, and we know with Dr. Olayemi Cardoso, Central Bank is in safe hands, is in the hands of somebody that will follow the law, that will do the right thing. But all he had to say, from discussion of short-term liquidity in the foreign exchange market to long-term structural change, I can say that all those issues are being dealt with in the policies of the current administration, but it won't all be done on one day. It is a direction of travel, and I think it's the right direction, but it will take time to adjust from, he described in very graphic terms, the kind of road we are on, the kind of driving that the country has been subjected to. But I think, as the last speaker said, what we want is a transformational leader, and by God's grace, we have one now. I think he has started to transform the Nigerian economy. So on the issue of this year's theme, emerging issues, navigating the complex balance between regulation and compliance, I think it's particularly timely, it's particularly relevant. As SLS said, we're an inherently, finance banking is inherently risky, so you need to be conservative. This summit is coming at a time that is pivotal in the economic history of Nigeria. The financial sector does have a crucial role to play And the theme of this of today's event does underscore the dynamic nature of the challenges we face, and it's imperative that we collectively address them together, balancing the complexities of regulation and compliance in order to build the type of resilient system that will underpin the eventual, what we pray will be an eventual move to rapid, sustained, and inclusive economic growth. As gatekeepers to the flows of capital that will shape Nigeria's future, few stakeholders bear more responsibility for charting an equitable, sustainable path to progress than those of us in this room here today. And so as we discuss these pressing issues, I'm happy to recognize the significant contributions of the banking sector to our development. The banking industry serves as the backbone of our financial infrastructure. And you know, no matter what we say in terms of the fact that we need to strengthen it, we need at this time to make sure that it really is able to cope with the stresses of the moment. It is a matter of pride that funds are mobilized across the whole spectrum, short-term, medium-term, and long-term funding with the pension system, with the pension funds. And overall, we have a financial system that if we can build on it, will be a pride to the country and to Africa as a whole. As we celebrate the strides we've made, we must grapple with emerging challenges that threaten the stability and integrity of the system. Rapid technological changes, the growing sophistication of financial crimes, increased trade and capital flow volatility. These dynamics introduce new and complex risks, which it is the duty of you as bank directors to manage. At the same time, we recognize that, well, I'm afraid to say that over-regulation can be counterproductive, stifling innovation and growth. I'm not sure there can be over-regulation, but definitely there needs to be a balance, as we heard earlier. And how do we strike this delicate balance? I believe the answer lies in collaboration. Regulators must partner with industry to promote innovations that drive financial access. Bankers have a duty to embed integrity and transparency into our culture and technology systems. Lawmakers need to pass dynamic policies which compel accountability while enabling sector-wide agility and growth. In perhaps more colorful terms, we're saying the same thing as was said, in less colorful terms, what was said earlier about the role of legislators, even critical. As we strive towards this balance, we must also invest in developing our human capital and institutional capabilities. And of course, that's where BDAN comes in. It has a whole commitment to training and to capacity building. Building a high integrity system requires instilling values from top to bottom while also empowering people at all levels to take responsibility. As was graphically mentioned to us earlier, it starts from the top. Once you don't have that, the right leadership in all its ramifications, you can forget it. And that's why I keep saying our hope and the hope of Nigerians is in the fact that you have a leadership that has taken bold, courageous decisions that the whole world agrees. Wherever you look, whether it's at the World Bank meetings, whether it's at the G20 meetings, there's a strong recognition internationally that the country has taken some key decisions and it just needs to keep going in that direction. And the private sectors of these more developed countries, they are pointing out and they are showing that they are interested and that it's worthy of their interest and their support and their money to invest in this country, which after people tell you, after China, after India, is the next biggest that's ripe for investments. We are committed to working closely with the Central Bank of Nigeria and industry stakeholders to develop a regulatory framework that is balanced, risk-based, and forward-thinking, working in collaboration with the CBN, everybody maintaining their lane as far as their mandates are concerned, and that was explained very clearly to us earlier. So I'd just like to say that, to my mind, the Nigerian banking industry has a bright future with a strong foundation, talented workforce, and a commitment to innovation. The industry is poised to play a significant role in driving Nigeria's development. This summit is a platform for open dialogue, for knowledge exchange and collaboration, and I think you'll agree, you've had some of that already. Encourage all participants to actively engage in the discussions, share the insights, and contribute to policy formulation of strategies and policies that advance our financial sector. Before I go, I must be fair and maybe directly respond to the challenge to live up to what has been indicated, challenge of delivering, speaking to delivering on some of the commitments, some of the directions of travel that we have pointed out, particularly as far as funding of liquidity in the foreign exchange market, which is critical at this stage. And even though that's just the short-term answer, it is an important one. And what I can say is that across various avenues, all efforts are being made to bring in funds that will shore up the liquidity of the financial system, of the foreign exchange system, and there's no reason at this stage to feel that the indications that were made earlier have changed in any way. It just takes time. On that note, and with that support from my dear brother, I say thank you very much for listening, and I wish you successful deliberations.
Thank you, thank you. Please put your hands together for him. You can do better than that. Thank you so much, Mr. Wale Edun, Honorable Minister of Finance and Coordinating Minister of the Economy, representative of the President of the Federal Republic of Nigeria. Thank you. At this point, we'll move forward, but quickly, I would like to acknowledge the presence of some very special guests we also have here. It is my honor and privilege to acknowledge the presence of Mrs. Adeze Aguela Kalu, Commissioner of Finance, Edo State. She's representing the Executive Governor of Edo State, Governor Godwin Obaseki. Please, can you put your hands together for her? You're welcome, ma'am. Let me also acknowledge the presence of Honorable Shize Nasara Bada. She's the Honorable Commissioner of Finance, Kaduna State, representing the Executive Governor of Kaduna State, Senator Sani Uba. Please put your hands together for her. I understand that we also have in this auditorium honorable members of the National Assembly here present and members of the Committee on Digital and Electronic Banking. If you're here, please can you just wave so that we acknowledge your presence. Okay, we have one here. Thank you so very much, sir. Thank you, sir. All right, moving forward at this point in time, I'd like to invite to the podium the representative of the Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima GCO, and he's no other person but Mr. Dr. Tokwe Fasua, Special Advisor on Economic Matters, Vice President's Office. Please put your hands together for him.
Thank you very much. Good morning, ladies and gentlemen. Okay, Honorable Minister of Finance has departed. Former Governor of Central Bank, 14th Mayor of Kano, Sarki. Good morning. Governor of Central Bank here represented by my friend Chibuzo FOB, Director of Payment Systems. Also the Chairman of BIDAN, Mr. Mustafa Chike-Obi, my senior brother. Bank managing directors here present, bank directors, ladies and gentlemen, permit me to stand on all other established protocol. This remark I'm delivering on behalf of my boss, Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima, at the 2023 Bank Directors Summit being held today, 7th December, at this, in this hall. It is with great pleasure that I agreed to deliver this speech today. However, I am unavoidably absent to do so in person due to the exigencies of statecraft and the frequent diversions that occur in my assignment. For this, I offer profound apologies, but as you may well know, I view the banking sector very fondly as one of my key constituencies, having worked in that honorable sector for a considerable period of time and also humbly recent in my career, meaning that I could as well have been sitting across the aisle, which distinguished bank directors today are sitting, if the call to public service hadn't become so compelling for me that I ported into the political space at some of the toughest times in our dear country, Nigeria. The sheer centrality of the banking sector and system to the growth and development of any nation cannot be overemphasized, and Nigeria offers no exception. Indeed, our banking industry, led by you, ladies and gentlemen, here seated, has been central to the many achievements of this country today. Whether we are talking about infrastructure stock, our industrial base, our service sector functionality, the deployment and development of our natural resources, our increasing trade visibility in Africa and beyond, investments in human capital, tech-enabled innovations, and indeed the frequent support for public sector institutions and government. Nigeria's banking industry is without doubt a key driver, an early adopter of technology, innovation, and change ahead of most other industries in the country. Whereas Nigeria's banking sector has seen its fair share of booms and busts, ups and downs, peaks and meltdowns, periods of burgeoning interventions, and occasional bailouts since its debut in 1894, still we have our work cut out for us. In all of the interventions that I mentioned earlier, trade, resource beneficiation, value addition to local product technology, service sector and beyond, there is still a lot more to be done. The Nigerian economy is still an open sesame, and we must all leverage on the vision of our dear President, His Excellency, President Bola Ahmed Tinubu, who has given us all marching orders to double this economy in a few years. This means that we must levitate above the challenges that we could spend considerable time enumerating, poring over, and agonizing about, and envision the urgent way forward. Mr. President is not weighed down by challenges, but is absolutely bullish about the possibilities of our economy. We must all buy into that enthusiasm and practical positivism. That is why the theme of your summit this year, navigating the complex balance between regulation and compliance as it relates to walking the tightrope between delivering economic growth, financial stability, financial innovations, returns on investment for your stakeholders, and of course, the need to comply with ever more stringent regulations born out of past local and global experiences and lessons, as well as increasing sophistication in the financial space, is very apt and commendable. The theme is a product of deep thought and is worthy of elucidation and unpacking, because somewhere in there is a pointer to the future of banking in Nigeria and a tectonic shift in the quantum and quality of the contributions of the sector and industry to the aspirations of our great nation. It is, however, cheering news to hear that Nigerian banks are performing quite solidly at this moment and that their stability is greatly assured. According to the Central Bank of Nigeria, the ratio of our bank's non-performing loans has dropped to 4.4% at the end of May 2023 compared to 15.01% recorded in 2017. Nigeria Bank's total credit to the private sector also increased by 88.64% in 7 years to 41.54 trillion as of May 2023, compared with 22.02 trillion in May 2017. As of November 2023, Nigerian banks recorded a capital adequacy ratio of 14.2%, above the minimum required limit, which is above the minimum required of 10%, with asset quality as measured by NPL, which I mentioned earlier, increasing marginally to 4.5%, slightly below the 5.0% prudential benchmark. We are also aware of recent news about a few of our banks now exceeding this ratio of NPL, but we are confident that these banks are savvy and capable of writing the course. What is more, liquidity ratio in the industry increased to 73.8%, well above the 30% regulatory requirement, indicating strong capacity of the banks to manage short-term liabilities. Having achieved this, the Central Bank of Nigeria has mooted the idea of a recapitalization of banks to further strengthen the industry, preparing our banks for even bigger challenges, more complexity in the field of finance, and of course, tooling our banks for a more catalytic role in the achievement of this $1 trillion economy that we aspire to in the immediate term. The challenges of payment systems, trade finance, and intervention in small and medium enterprises, financing large-ticket commercial transactions, loan syndications and complex structures, industry and infrastructure, and all of that have metamorphosed, but must be tackled with domestic firepower, financial firepower, and leverage internationally in the most strategic manner. We believe our banks have what it takes and that these ambitions are achievable. A new vista beckons where our banks will not only be relevant to our local businesses, but also tool up technologically to confront the challenges of new global innovations and thus propel and pivot the economic development that we solely desire. I also included that this includes the challenge posed by the exit of some conglomerates recently, notably GSK, Sanofi, P&G, which if we actually look very closely, we realize that those are born out of their own strategy and some of their international challenges. And this provides another set of opportunity for local intervention by our banks to support local players who can fill the spaces being created by these conglomerates who are leaving. This brings me to the challenge of compliance versus performance. How do the banks achieve this intricate balance? How do our banks ensure that regulations are complied with on time and sustainably, while they also maintain profitability to deliver the goods to stakeholders and shareholders alike? My belief is that there needs to be even more dialogue between regulators and operators in the evolution of regulation and requirements for compliance. Regulation is central to the stability of industries and indeed to their growth and positive contribution to society. Lessons have been learned in the banking industry in this regard, and the global recession precipitated by the financial crisis of 2009 to 2011 humbled many economies and banking systems around the world. The confidence reposed in self-regulation by the banking industry caused great embarrassment to one of the most distinguished banking regulators of all time, that's Mr. Alan Greenspan. The Basel III macroprudential provisions and counter-cyclical measures were put in place with even more stringency coming in from requirements of the International Financial Reporting Standards. Those lessons and regulations may have contributed greatly to the quick taming of the recent ruckus around some cryptocurrency-related banks in the United States of America. And the 14th Emir did mention them, of course, Silicon Valley Bank, First Mutual, Signature Bank in the United States in 2022-2023. The systemic contagion that was predicted in some quarters never materialized, but eternal vigilance remains the watchword. My belief is that the banking system will get stronger through those regulations, but continuous dialogue is required to continue to ensure bank profitability and sustainability. Indeed, this subject should be integral to the concerns about sustainable finance, which embeds all the key issues of the moment, which presents a new vista of financing and business model tweaking for our banks. What is more, our central bank under new leadership has committed to an elevated level of professionalism and focus, creating more space for enhanced intermediation in the credit space for commercial, merchant, and even neobanks to perform their functions. We have every confidence that these promise and commitment will be adhered to. In conclusion, I want to congratulate you all for the distinguished positions of responsibility that you have attained today, and to remind you that a great responsibility has been thrust upon your shoulders beyond and above what you used to bear, to see to the success, evolvement, and greatness of Nigeria. As several codes of corporate governance continue to pile more pressure on you, responsibilities and duties on directors of companies, especially banks, you must continue to up the ante, expose yourself to the best in capacity development, and also so that to be able to bring to the boards that you serve timely information, encouragement, education, admonition, and guidance towards ensuring that the banks on the board of which you sit continue to deliver with sustainability in mind. I assure you that in spite of these increased strictures that are conferred by more compliance and regulatory requirements for a country like ours, the many challenges in society, developing and maintaining infrastructure, building human capital, and acquiring and developing cutting-edge knowledge, even in the 4th, 5th, and 6th industrial revolution, powered by artificial intelligence, machine learning, quantum mechanics, nanocomputing, and all the yet-to-be-discovered innovations that make humanity great, there is value to be found and bottom lines to be greatly enhanced. Let us also not forget that the Nigerian economy is not a standalone, but that whatever we achieve here must of necessity be exported to our neighbors, just as we learn from them too. Our constituency is not just ourselves, but Africa and the world. Your job is therefore clearly defined, ladies and gentlemen. On this note, I hereby wish you all happy deliberations, and I also wish you Godspeed as you evolve new codes, new resolves, new approaches and strategies on your journeys to further achievements in arguably the world's most catalytic and most important industry, finance and banking. Thank you very much for the opportunity to speak. God bless the Federal Republic of Nigeria. Thank you very much.
Thank you very much, sir. Please put your hands together for him as he makes his way to his seat. Dr. Tokwe Fasua, Special Advisor on Economic Matters, Office of the Vice President. Please put your hands together for him once again. All right, so we are quickly running out of time, but I'll crave the indulgence of the audience to quickly invite Mrs. Adeze Aguela Kalu, Commissioner of Finance, Edo State, representing the Governor of Edo State, His Excellency Governor Godwin Obaseki, for his goodwill message.
The President of the Federal Republic of Nigeria, ably represented by the Minister of Finance and the Coordinating Minister of the Economy, the Vice President of Nigeria, ably represented here as well, His Royal Highness. I know he's just popped out, but I thought I'll just quickly mention that in my protocol. Ladies and gentlemen, permit me to stand on the already established protocol. My name is Adaze Aguele Kalu, not Agwala, Aguele Kalu, and I'm the Honorable Commissioner for Finance in Edo State, and I'm here to represent my Governor, Mr. Godwin Obaseki, who is unavoidably absent. He actually came into Abuja but had to rush back for another meeting. And so I'll just quickly run through his goodwill message / remarks. I think I have about 5 minutes, so I'll try and do this quickly. Before I start, can I just say this is a good opportunity to talk to the banks that are here today. Edo State is ready for business. We have 1 year to round up, but Edo State is ready for business. And I'll quickly mention that we're doing so much in terms of infrastructure. We're doing so much in terms of IT. We have fiber optics going across all 18 local government areas in Edo State. And we've done about 50% of that right now. So in your village, in the village in Edo State, you can actually have access to the internet. And this really helps ease of doing business. It helps the youth, it helps students. Our classrooms, we can actually know how many students are in class in terms of education because we have tablets that have been deployed across our schools in Edo State, across the 18 local government areas. We have so much going on, so we are ready for business. Just to quickly say that before I start and go through my Excellency's speech. So it reads as this: I am delighted to be here today in the midst of luminaries, captains of industry, and doyens of the banking sector, a sector which I come from and belong to. In recent years, there have been significant regulatory reforms to enhance transparency, governance, and risk management within banks. These reforms stem from global best practices and are designed to align the Nigerian banking sector with international standards. One notable reform is the adoption of the Basel III framework, which introduces more stringent capital requirements, liquidity standards, and risk management practices. Now, for those who don't know, we had Basel I, Basel II, and III, which stem from, the fallback of what happened in the 2007-2008 financial crisis. Now, the compliance with Basel III necessitates significant adjustment in banking operations and capital planning. Additionally, the CBN has been proactive in addressing issues such as non-performing loans, cybersecurity threats, anti-money laundering, and other reforms that support the robust framework while adopting regulatory expectations. Policies and circulars such as BOFIA, the Nigerian Sustainable Banking Principles, Financial Reporting Standards, Code of Corporate Governance, and even the recent bank account closure, if you don't have a BVN or NIN, by March 2024, are very critical policies and circulars that will ensure financial stability, consumer protection, and the overall soundness of the Nigerian banking system. Recognizing this pivotal juncture, the Board of Directors of BIDAN have convened this summit, providing an avenue for stakeholders to have a dialogue to address the issues that I've just mentioned. So it is time for us to redefine the roadmap strategically and to navigate the intricacies to proactively balance financial regulation, compliance, and economic productivity. Banks all over the world now, mostly in developed countries, are financing multi-million-dollar transactions in renewable energy, clean manufacturing, clean transportation, blue economy, smart housing, and even in technology. And these are critical sectors that will actually grow any economy. So if you do have this ambition to actually grow the Nigerian economy to about $1 trillion, you need to really look at these other sectors that are not fossil fuel reliant. If we look at the current capitalization of banks today, I mean in dollar terms, right? In dollar terms, is nowhere near the total assets of a particular bank in Africa. So your ranking is just not there. There's need for a lot more work. And I think it's no more business as usual. Nigeria is known as the giant of Africa, the giant of Africa. when it comes to your banking sector, you're not proving that you're the giant of Africa. And I think we need to sit up and start doing things differently. So this is one of the compelling reasons, I think, why the CBN will be looking for another round of consolidation. So I think we have exciting times ahead. Banks in Nigeria cannot continue to take the back seat when it comes to climate change. You know, the Global North, since they signed the Paris Agreement, have put aside about $100 billion to address climate mitigation and climate change. And Nigeria just has to make sure that they actually drive this change towards climate action. So for Nigeria to prosper in the current digital era, we have to look at technical improvements as well as human capacity building. We have issues of cybersecurity, blockchain, we have issues of identity theft. And I think it's very important for stakeholders to work together to come to plan or chart a way for forward-thinking policies to be put in place to safeguard new risk and capitalize the benefits of digital banking. Finally, let me touch on the issue of corporate governance. Governance is paramount because it will ensure that our banks will continue to be efficient, effective, and continue to wax strong. The leadership is expected to cooperate with the regulators to address all the issues that will be discussed today in this forum. According to Winston Churchill, as long as we have faith in our own cause and an unconquerable will to win, success will not be denied us. And so, as the good book says, wisdom is profitable to direct. Let me commend the conveners of this well put together summit for their time, because even the topic that was selected was very timely and very strategic. And I wish you all very fruitful deliberations and dialogue. Thank you very much.
Thank you, ma'am. Thank you. You can do better than that. Please put your hands together for her. Thank you so much. That was Mrs. Adeze Aguela Kalu, Commissioner of Finance, Edo State, representing the Governor of Edo State, His Excellency Governor Godwin Obaseki, delivering the good message. Thank you so much, ma'am. At this juncture, I'd also like to invite to the podium Honorable Shiza Nasara Bada, Honorable Commissioner of Finance, Kaduna State, representing the Governor of Kaduna State, Senator Ubasani.
Thank you very much. I'm very happy he pronounced my name this time around correctly. The first time he murdered my name, I almost had a heart attack. If you know it is a woman, you have to actually call her name right. That's the beginning, isn't it? I had a speech prepared, but I've discarded it. I feel my governor would want me to add some value to this meeting. So a lot of things that I had in my speech has already been said by previous speakers. My name is Shiza Nasara Bada. I'm the Honorable Commissioner of Finance for Kaduna State. I'd like to extend the well wishes of my governor, His Excellency, distinguished Senator Malam Ubasani. He sends his well wishes to all of you. As you know, he was the chairman on banking committee when he was in the Senate, and he's very passionate about the banking sector. He would have loved to be here, but he has other engagements outside the country that won't allow him to be here. So I'm here to represent him. As it has been said previously, the banking sector, of course, plays a key role in the economy. You're responsible for financial transactions, investment, and of course, economic growth. This responsibility, of course, is a lot. And the Nigerian people are looking up to you. I am looking up to you. The president is looking up to you. You have to have the right balance in terms of regulation and compliance. On a global scale, we faced a new challenge that we had never seen coming, and that was the COVID-19 challenge. In my own state, we had to think of how to be able to survive that period. In the banking industry, you also had to think of how to survive in that challenging time. We found ourselves working remotely or combining a hybrid system. This in itself created a new risk for us to address. This in itself creates a risk for you to also address as well. You're also facing challenges now, challenges of fintech companies, cryptocurrency. I remember recently one of the FTX, yeah, the crypto boss was arrested. Now, the banking sector needs to think, how is the Nigerian banking industry going to regulate this kind of issues to avoid that kind of fraud happening in the Nigerian environment? These are challenges that you need to think about. In Nigeria, every day we see data breaches going on. We have scammers, we have hackers, we have internet fraudsters. These challenges are calling on you to think and deliberate on how you would need to navigate in this new evolving times that we're facing. Then we have another major challenge. It hasn't been proven the exact numbers that have been financially excluded, but I can say that more than 3/4 of the population are financially excluded. How then will you, as the financial sector, be able to reach out to the excluded in the society? In my state, we're making efforts, including passing an executive bill to be able to address financial exclusion. These are things that you all need to look at. So you have the regulations that are there. You have the BOFIA, you have ACAMA, you have the NDIC Act, you have the CBN Act, and so on and so forth. His Royal Highness spoke on it. He said it is all right, it doesn't need to be changed. I would leave that to you to deliberate and decide what you need to do or what doesn't need to be done. But I would say that I stand with regulation. My governor also stands with regulation, because regulation definitely is required to give the right guidelines for us to take the right decisions. If we don't have regulations, how then can we check our compliance level? These are the kind of questions we should be asking ourselves. On an international level, we're meant to think of prudence regulations. I don't have to go into details on that. You're meant to think of consumer protection laws. You're also meant to think about anti-money laundering and counter-terrorism financing laws. You're supposed to think of data privacy and security. I came from the UK financial system where my money is safe. I feel very secure in the UK financial system. But today, as the Commissioner of Finance, I don't feel so safe with my money in the bank. This morning, I read in the news that the stress test that was done by the banks I respected actually didn't get to pass that test. That actually sent a shocker down my spine. Having said that, there's still hope, because you have also proven over the years, when many countries were facing financial crisis, Nigerian banking sector still survived. We know that the CBN played a key role in helping the Nigerian financial sector survive. So for me, it means you're doing something right. You just need to do much more. You need to sit down together and talk collectively. Possibly not only you as well. You should also try to engage the subnationals. What I mean is you probably need to engage even the finance commissioners. We have a lot to contribute. We see the decisions you take. Sometimes you get it right, sometimes you don't get it. We might also have a lot, we also, not just might, we have something to contribute as well. So having said that, I would reiterate on the fact that you know that the regulations and the compliance are very key. You must have that right balance. Of course, apart from what I've just given an example of myself. If I have 100 million in Nigerian bank today, it has lost its value. I would have been better off if I had bought an asset. So these are things that you should be thinking of. How do you protect our deposits? I'm speaking from the part, the perspective of an ordinary human being, an ordinary Nigerian. Then you need to improve, of course, in terms of giving access to finance. In those areas, you're over-regulated. In some areas, you're under-regulated. This dialogue and this place, I hope, would give you the opportunity to be able to address the issues that we know the whole banking sector or financial sector is facing. You also need to improve on your risk mitigation measures. I would always say that the legal obligations are always good. It's easier, actually, to comply than to be able to pay heavy penalties. Of course, there are many things that you have to look at. When you comply, it gives you an edge. I actually respect permit me to say that the number one, I didn't do the ranking, you did the ranking, you said Zenith is the number one bank. Okay, so all my money in Kaduna State is actually right now in Zenith Bank. And why is the money there, Kaduna State Fund there? Initially, it was in Central Bank of Nigeria because I felt it was safer there. Except that Central Bank is a regulator, is not supposed to provide ordinary commercial banking services. So we've moved down to a commercial bank. Why were our funds there? We looked at the competitive advantage that Zenith was giving us. When you comply, you give us confidence that yes, our money is safe. If we don't feel safe putting our monies in your bank, then how do we convince the ordinary Nigerian to be able to take their money out of their homes into the banking sector and make it move around and produce the necessary movement that it needs for an economy to grow? So these are things you should be thinking of. These are things you should be looking at. For me, I would like to leave you with a little bit of advice. What advice is that? I think you need to improve. It's not just about deregulation and the compliance standards. It's more for me about you having the right strategies, robust strategies in place, and making your team understand the importance of complying with those strategies. The measures on how you make them understand is all left to you, whether it is through training or educative programs, it's all left to you to do. Then of course you have the added advantage of technology that has coming. We have AI now that gives you an added advantage. For me as a Commissioner of Finance, I'm looking at that in terms of my financial reporting. You have international financial reporting standards that gives you a certain level of reporting that you must comply with. So for me, this is really a timely topic. And on behalf of my governor and the people of Kaduna State, I would like to wish you a fruitful celebration. God bless you. God bless Nigeria. God bless the subnaturals. Thank you.
Thank you very much. Please, you can do better than that. Put your hands together for her as she makes her way to her seat. Honorable Shiza Nasser Abada, Honorable Commissioner of Finance, Kaduna State. Thank you so much for the goodwill message. All right, in a short while from now, we are actually getting to the climax of this event. The reason why we're here, where we'll have sufficient time to deliberate on the topic, financial regulation, compliance, challenges for banks, opportunities, and the way forward. But we'll be getting the stage ready in a very short while from now. But let me quickly acknowledge the presence of Abba Bello, the Managing Director, Nexim Bank, that's Nigerian Export-Import Bank. Please put your hands together for him. Let me also acknowledge the presence of Mohammed Mustafa, the chairman of Jais Bank. He's also here with us. Please put your hands together for him. You're welcome, sir. So, I'd like to crave the indulgence of the audience, the dignitaries here present. Please, in the next 2 minutes, we'll try to get the stage set, and we'll be going right into our panel discussion, just within 2 minutes, and we'll be ready for the next segment of the event. Thank you very much.
In the heart of Nigeria's bustling financial landscape, a story unfolds.
Sound.
A tale of global transformation, strategic innovation, and profound impact. This is the story and the legacy of Nigeria's most innovative bank and foremost financial institution, Wema Bank. Wema Bank was founded on May 2nd, 1945, under the old name of Agbamabe Bank Limited. The bank was renamed Wema Bank in 1969, marking the launch of the bank's rise to prominence. From being listed on the Nigerian Stock Exchange in 1990 to being granted a universal banking license by the Central Bank of Nigeria in February 2001. And then becoming a regional bank in 2009. The bank made steady progress over the years. A significant part of Wema Bank's journey was the upgrade of its regional banking license to a national license in 2015. This milestone spearheaded the beginning of a revolutionary decade in the Wema Bank journey, The first 2 years after the upgrade saw the bank re-strategize and innovate to create more and better solutions to positively impact the lives of customers and support their goals. The first and arguably the biggest of these innovative solutions created since becoming a national bank was the launch of Africa's first fully digital bank, Alat, in 2017. Through the game-changing Alat platform, Wema Bank redefined banking through a wide array of reliable, seamless, and intersectional banking services, all accessible on Alat, making Alat a one-stop app for every financial need. To the youth, we are an enemy of goals. To the underprivileged and underrepresented, we are an equalizer. To the established, we are a driver for greater success. To the businesses, we are a partner like none other. To the finance industry, we are the leading light and the pace setters. To the nation, we are champions of development. To the world, we are facilitators of innovation, empowerers of communities, and promoters of sustainability. And to us, you are everything. This journey is just getting started. Join us as we redefine the standards of banking and financial services in Africa and make an indelible contribution to shaping the future. Remember, we are with you all the way.
I've been running my business on my own, trying my best to get it to the next level, but I really need some help to get ahead. I know just what to do, I'll it for my loan, overdraft, step by step in my dream business before. Salary, entrepreneurs, get your loans with no collateral. Quick sign up, zero paperwork, step by step to your dream business before.
Vault is available to individuals, SMEs, and corporate customers. Download Vault by Polaris Bank from the Google Play Store or Apple App Store to get started today.
Thinking of banking in Africa? Think Zenith. In today's fast-moving, fast-changing world, you need a financial partner that understands your unique expectations. A bank with presence in major financial centers across the world, with the enabling platform to facilitate seamlessly, whenever, wherever, however. A bank with best-in-class financial solutions from a superb combination of technology and human touch for easy, fast, and secure banking that creates real value. Turning dreams into reality is now in your hands. People, technology, service, Zenith Bank, in your best interest.
When you hear this sound like ready, we can see the transfer when you want to serve you better. No be play, we go turn your business around. We have fidelity, show you with the best we want to learn. Save your money, your girl, we can serve we don't need time. Say now your future be a concern. At fidelity,
In the heart of Nigeria's bustling financial landscape, a story unfolds.
Distinguished ladies and gentlemen, please settle down for the next session.
Strategic innovation and profound impact.
Please settle down, settle down, settle down. Thank you very much. Please settle down, settle down. We'll have enough time after this segment for pleasantries. Please settle down. Thank you very much. So like I stated earlier on, we have reached the climax of today's event, the Bank Directors Summit 2023. But before then, I'd also still want to acknowledge those who have joined us virtually for this event, for staying with us. Now, interestingly, after the panel session, after the discussants must have deliberated on the topic, there'll be enough time and provision for questions and answer. So those who are joining us online, please make sure you send in your questions or comments as well, and we'll do our best to make sure we read them. On that note, I'd like to quickly also tender the unreserved apology of the Governor of Abia State, His Excellency Alex Uti. He was actually on his way here, but his plane had a bird strike. And for that reason, his flight was delayed for 1 p.m. Unfortunately, he will not join us here, so he sent in his unreserved apology. On that note, ladies and gentlemen, I would like to quickly introduce our panelists for this session. And the topic for discussion today is financial regulation, compliance challenges for banks, opportunities, and the way forward. In no particular order, I would like to invite to the podium Mr. Bello Hassan. He's the MD, CEO, NDIC. Please put your hands together for him as he makes his way to the podium. You can do better than that. Thank you very much, sir. You're most welcome. Please. Yes. I'd also like to invite on stage Dr. Eberechukwu Oneze, Executive Director, AMCON. Please put your hands together for him as he comes to the podium. Okay. You're most welcome, sir. Okay. We also have, as part of the panelists, Ms. Tinuade Awe, NXG Regulation Limited. She's from NGX Regulation Limited. Please put your hands together for her. She makes her way forward. You're welcome, ma'am. Please put your hands together for her. I understand she's the CEO of NGX Regulations Limited. All right. Thank you very much. Our next panelist is Mr. Patterson Bolega, HCIB FCA, President Compliance Institute, Nigeria. Please put your hands together for him. You're welcome, sir. And your moderator for this session is no other person but Alhaji MK Ahmed, OON, Chairman, Polaris Bank Limited. Put your hands together for him. You're welcome, sir. Over to you, sir.
Hello? Okay, thank you. The chairman of the occasion, distinguished participants, apologies, we are 1 hour behind schedule. So with the permission of the organizers, we will not spend 1 hour as part of the panelists, and perhaps to allow for other colleagues in the audience to provide perspective. The tone has been set. The 14th Emir of Kano, Sarki Mamadou Sanusi II, had identified quite a few issues which many of us have taken note, and I believe that will form the basis for our discussions. I would also want to advise that, to request my colleagues, we have 1 hour, which means that ordinarily we should have taken 10 minutes. Is it possible for each one of us to comment, to take just 5 minutes? I'm saying that because of the fact that if it is possible, we can leave here by 2. But beyond that, also give opportunity to our colleagues. Now, having said that, and in order to get organized, we thought we could also share some of the issues that are being discussed. And with their permission, the MD of NDIC would handle issues on cost of compliance and regulation. So he would give us his perspective and issues that have also been raised. Mr. Ibere, who is also here, will be talking about the need for better or perhaps more regulation and regulatory ambiguity. Pattison, the President Institute of Compliance, would also speak on basically regulatory efficiency or inefficiency, overlap, and other related issues. And the last but not the least, Tinu, sister, I will be speaking about largely evaluation of existing regulations. Do we have enough regulations or do we have less regulations? And what's the cost-benefit analysis? In other words, basically what we are discussing is that can we be as bullish as possible? Of course, the Emir talked about we need regulation. There is no doubt about it. We are a highly regulated industry. And given the fact that, as I always say, we are managing other people's money, and to that extent, that is important. And the fact that we don't carry the can. So there is an institution called Lender of Last Resort that carries that can. So to that extent, regulation is important. But to what extent should regulation be considered to be adequate or excessive? And we should not shy away from taking a drastic and perhaps more comprehensive action. I always give the example of Tayo. Tayo is currently the chairman of the Presidential Committee on Tax and Fiscal Policy. And he's saying that we have over 700 taxes and levies. And for one of them was wheelbarrow levy in some of the local government. But he said we can reduce those ones to single digits. So is it possible that as a regulated entity, I can have fewer regulations and also have a stronger, issues that perhaps instead of sending the same information to different regulators, I have one place that I can send this and it can be shared. So these are some of the things that we need to be as creative as possible. Of course, our colleagues, particularly from the regulatory environment, most of them are not here. Of course, they have been represented by the MD of NDIC. But we should not be discouraged. We should articulate our position, and hopefully we should start the engagement. Both the Minister of Finance, CME, and Sarki Sanusi had clearly pointed out the need for engagement. I hope this is the beginning, and at the end of the day, we should articulate our position and share that. So on behalf of my colleagues on this side, I would want to ask the MD of NDIC to speak, and then subsequently Ebere, and in that order. Thank you, distinguished colleagues.
Thank you very much, the moderator. Good morning, ladies and gentlemen. Please let me stand on the existing protocol. Please permit me, before I respond to that issue, to also respond to the issue raised by the chairman in his opening remarks. He raised two issues, the issue of AMCON contribution, which I think His Royal Highness has responded, and then the other issue, which is the NDIC, the deposit insurance premium. I think it's important that I also respond to that because I could see what I may call information asymmetry when it comes to deposit insurance. So let me put it this way, that deposit insurance is one of the safety net arrangements that is put in place to protect depositors and also contribute to financial system stability. There are about 95 countries where deposit insurance is being practiced as we speak, Nigeria being one of them. And also, Nigeria is a member of the International Association of Deposit Insurance, which is the standard setting body for deposit insurance practices. And this standard, body has issued core principles for effective deposit insurance, which is used to gauge how effective a deposit insurance system is in place. So what we are practicing in Nigeria is explicit deposit insurance, which means before the event happens, the deposit insurer will announce that this is the amount that is covered. And also we operate what we call ex-ante funding system, which means we systematically begin to collect premium from the participating banks and build up a fund so that in the event of any failure, that's what we use to reimburse depositors in a timely manner in order to engender confidence within the system. Core principle number 9, which is about funding, says that the cost of deposit insurance fund is to be borne by the participating banks. That is what is being practiced in all the 95 countries that I mentioned. When NDIC started, deposit insurance premium was on a flat rate basis, which means all banks pay a certain percentage. But right from 2008, NDIC transited from flat rate premium computation to differential premium assessment, which means the premium you pay is a function of your risk management control functions. It's a function of how risky you are to the system. Currently, the premium, the percentage basis point that is being charged banks range between 35 basis point to 65 basis point. And let me explain this. 35 basis point is the base rate, which means all banks are expected to pay 35 basis point. Then the add-ons, depending on the risk, how risky you are to the system, you can pay from 1%, 1 basis point to 30 basis point. So there are some banks that are paying 35 basis point, which is the base rate, and there are some banks that are even paying 65% basis point. So what I would challenge directors is here, not to look at the amount they are paying, but to ask their management, what basis point are we paying? Because that will go a long way in telling you how the bank is being run. Because that is where you come in. Because what we are saying in NDIC is that we are ready to forego quantity for quality. We can forego the premium in as much as you strengthen your risk management risk management practices to make your institution more sound, safe, and secured. We are ready to forego the premium, higher premium, in as much as you do that. So I want to challenge directors. What you pay, everybody can tell me, maybe you may have it coming here ready to challenge NDIC to say this is what we are paying is high. But I think that is not enough. It's important for you to ask management, what basis point are we paying? Because NDIC said the base point, the base rate is 35 basis point, and it can increase up to 65 basis point depending on your risk. So that is what you need to work on, not the amount. And also happy to know that, like I said, since 2008 when NDIC introduced or migrated to differential premium assessment, we currently are reviewing the framework. We have done an exposure draft, which we posted on our website. Even though when we posted the exposure draft on the website, the response we got was just from about 4 or 5 banks. But we took it upon ourselves to take it to the doors of the banks. We visited each and every bank to explain in details how the framework works, because we believe it is when banks understand how it works that they will actually work towards minimizing or reducing what they pay by strengthening their practices, risk management practices. And like I said, when you go back, challenge your management, ask them how much are you paying? What is the basis point you are paying? Are you close to the base rate, or are you on the higher side? I want to say that from the available records, it is not the bank with the highest deposit that is paying the highest premium. And this is the secret. So you need to go and work on your risk management practices to make sure that they are sound going forward. So I think that is fine. Then let me also speak on generally on cost of regulation. I had the privilege to look at the pricing model of most banks. And what are the key issues there? I know that are the direct cost, that's the interest you pay on deposits, the interest you pay on interbank, the interest you pay on other borrowed funds. Then the indirect cost is the wages, the salaries, the overhead. Then the statutory cost. The statutory costs are the NDIC premium they are talking about, the charges to AMCON, the CRR, maybe the liquidity ratio, the cost, and then also I see banks adding even the cost of holding non-earning assets, and lastly, the expected target return. So if you look at all these elements, from what I have seen based on the models that banks are operating, statutory cost is actually the least. So if you want to even lower down the rate of interest you charge your customers, what you need to work on principally is on the operating costs, because that is the largest amount, and also your expectations. I know directors, you want to maximize your returns to shareholders, of course, but there are some banks with target expected rate of return is quite high, and those are areas that you need to work on to bring it down. Each regulation, Chairman, each regulation that is issued, what we need to understand is either intended to enhance the resilience of that particular institution or to contribute towards financial system stability. That is the objective behind any regulation that is issued. But of course, banks look at it the other way around. That look, because essentially we know the objective of any shareholder or any director is to see how they can maximize the return to their shareholders. So how is that regulation restricting them from taking more risk, or how is it affecting their bottom line? That's what they look at. But I want directors to look at regulation from this perspective, that any regulation that is issued is either intended to enhance the resilience of that institution or to contribute to financial system stability. Let me say in closing remark that there are jurisdictions in Nigeria. Regulation supervision is not cheap, it's highly expensive. Regulators need to attract and retain skilled, quality staff in order to be able to carry out that effective supervision or regulation. In Nigeria, once we get banking license, after paying the licensing fee, that is all. You can literally go and hang that license on your boardroom. I know of jurisdictions where on an annual basis, they pay regulators licensing renewal fee. I know jurisdictions where when there is any examination, the institutions are billed to pay for the cost of that examination. But it's not happening in this jurisdiction. The government has taken it upon itself as part of cost of maintaining financial system stability. So I want directors to look at regulation from this perspective. It's not meant to limit what they can do, but just to make sure that they remain resilient and also contribute to financial system stability. Thank you very much.
Thank you very much, MD. And MD was also former Director of Banking Supervision, Central Bank, so I believe he may also be representing Central Bank. We have also given that opportunity to speak for more than 5 minutes. So my colleagues, if you can be, at least let's see if you can respect the 5 minutes. Thank you.
Okay, thank you, Mr. Moderator. Just like the first speaker said, the chairman raised a couple of issues, one bordering on AMCON and the other one bordering on NDIC, and all related to the cost contribution to the resolution cost fund. I think this is codified, and His Royal Highness has actually dealt with it in a very nice way. So I want to also canvass the same views, the same reasons he has given. I think AMCON coming in was a kind of coming to save the financial system. And somehow, the cost of that crisis needs to be paid. And who pays it? I think CBN and other government actors in their wisdom realize that the direct beneficiaries of that intervention, we are the banks, and it's only fair for them to pay for the cost of that resolution. So that's the way I really want to deal with the issue, because His Royal Highness has extensively dealt with the issue, so I don't want to dwell on it. So I'll withdraw and retreat and talk about what I've been assigned to do. Actually, what I've been assigned to do today is just to talk about regulation in the Nigerian banking industry. Whether we need more regulation or better regulation. But my thinking is that what we need is smart regulation. I also hold the view, or the views canvassed by the former governor of the central bank, His Excellency. I think the banking industry is an industry that is heavily regulated across the world. It is not something that is peculiar to our jurisdiction. So because of the inherent risk, so we live in a VUCA world. The world is more volatile, more uncertain. So you need to be prepared to deal with these issues. And from my professional orientation, economist, we feel that the market can deliver everything you want. And that's why you have some kind of regulation and government intervention. Market doesn't behave well all the time. So it needs to be reined in somehow. And one way to do it is this kind of regulation. So the idea of that banks are over-regulated, I don't like using the word over-regulation. But what I think is that there should be a kind of balance in terms of regulation. So we don't need to stifle growth in the banking industry. We don't need to stifle innovation. We need to give people space, bank space to create and innovate. But then we also have to think about the risk. What risk does that leave us with? We need to think about that. Things are more uncertain, and if you don't intervene and create some kind of rules that will shape behaviors, then it becomes very difficult for us to handle some of the risks that will arise. Think about the crime, think about emerging technology, AI, all of these things coming into the space in rapid succession. So there needs to be regulation. What needs to be done is to find a balance such that the emphasis will be more on compliance, make sure that banks even comply with those regulations. Yeah, why AMCON is in existence is just, maybe you can say some people were asleep at the switch. People that should supervise didn't do enough. So why was there crisis in the first place? So why was there crisis? So we need better supervision. We need better enforcement of the rules. And if we have better supervision, I think we'll have a more stable financial system. So there needs to be a balance. There is the argument of whether over-regulation. I don't want to say it. I also want to use the word over-regulation. But regulation can be smarter. We can simplify them, reduce some kind of ambiguity around them. It's also important to take stock. Last night I looked at the CBN website. I saw a heap of, mountain of regulations. So they are fine, but has time come for us to sit down and look back and reflect and say, what are these regulations all about? Are there opportunities for streamlining them? Is there something we can do to refine them in such a way that also focused and reduce the cost for the operators? I think that's where the discussion should focus on, instead of using the word over-regulation or under-regulation. So thank you, Mr. Chairman.
Thank you very much, Dr. Berry. And we'll go to the next person. Patson, thank you.
Okay. Thank you very much, Mr. Chairman. I want to take a cue from the last speaker to support you that there's really nothing like over-regulation. It only happens accidentally, because sometimes when you come up with regulation, you may have some unintended consequences. It happens everywhere in the world. However, when we start trying to balance whether there's overregulation or not, comes when at the other side, the operator's side, you directors, you now start looking at the costs of compliance. And the truth of the matter is that the cost of compliance is a good cost. As you heard from the last two speakers, you need to put compliance in place. And compliance is not cheap. And good compliance is good business. Your good compliance can sell your business and make you get better. I can tell you because I have experienced it. I worked 18 years in an organization, and I know where that organization is today when I look back from where I started with them. And that is because they put good compliance in place, and they were able to sit with the who is who globally, and they could talk to them because they had good compliance. So compliance is good. So how will the industry therefore respond to inefficiencies that may arise as a result of regulatory issues? I think the first thing is we need to make it nimble, invest in technology. If you apply AI, it reduces all the manual processes that will enable you to reduce your staffing costs and all the unnecessary processes that we have in place today. And on the regulatory side also, RegTech can help us to make it easy for the operators to comply. So it works both ways. Also, we need to make it risk-based. We have to apply our resources to those risk areas that it matters most to us. If we do it that way, we tend to solve the problems that matter and then free up time for the customers, the reason for which we are in business. And then we need to collaborate more. We need to do more of advocacy. In my days in banking, we started a number of things like the Committee of Chief Compliance Officers, then now called Association of Chief Compliance Officers of Banks, ACOBIN. And I'm sure a lot of us here can attest to the fact that the setting up of ACOBIN to bring all players to the same table to address compliance issues and take out competition amongst us has helped this country and has actually put us in the world map of compliance. And it has also helped you to increase your business. Because of that singular reason, I remember in 2007, Nigeria was taken out of the FATF non-cooperative list. And that brought a lot of investment to Nigeria. So compliance is good business. So ACOBIN and the efforts around ACOBIN are the direction we should go. We should have more public-private partnerships where the regulators and the operators can sit down together and agree way forward. There's nothing wrong in lobbying even our legislators. We can form lobby groups to lobby our legislators to take the lawmaking even right from the roots, to favor the industries that we operate in. And talking about what we need to do to address inefficiency, we need to, on our own side, the directors, try to manage lean offices, create an office situation where you don't have to have bloated structures and eliminate processes that will not add value to your customers. Involve yourself more in activities that will increase your continuous improvement. In fact, compliance is about continuous improvement, because what compliance does is that it looks for opportunities of non-compliance and then try to see how they can turn those gaps they see into improvements in the system on a continuous way. So invest in improving your compliance efforts. Get your businesses more customer-centric by introducing technology and processes that can enhance your customers' experience and create user-friendly environments for your customers. For part of regulators also, we can also introduce, I know we have sandboxes. I know Central Bank introduced the regulatory sandbox. We need to see more of that happening, where you actually encourage the operators to come in and develop things with you so you can see it work with them and then get innovations easily done without worrying about regulation. These things happen everywhere, and like my colleague has said before, smart regulations have worked very well in places like Singapore, where we found out that they had smart initiatives leveraging on technology to make regulation a worthwhile thing. And of course, we need to also look at the issues around ambiguities that arise from regulatory issues. We need to address it from the front, agreeing that it is not the regulation that is the problem in the first place, but that there is need for us to actually introduce regulatory compliance programs that can address anything that could prevent us from complying, because complying requires us to comply in spirit. In other words, you must not only just comply with the letter, we must understand the reasons behind the regulation and buy into it, and comply in the spirit of it. Our focus all this while has been, and I think most of the discussions here have been on the hard regulation, what we call the hard rules. Not much emphasis actually is being placed in regulation of our behavior. And I think that is a gap that our regulatory platforms must change. If you look at UK today, best practice environments, they have what they call senior managers regime, where personal liability is very key. Consequences, matter. We need to change more and do more of a soft issue regulation to regulate the behavior, because it's the behavior that translates into the non-compliance of the hard regulatory requirements. So we need to do that, and then we need to also be proactive and see how we can make use of even legal advice in order to remove ambiguity in our regulations. And also, I've said it before, collaboration. Thank you.
Thank you very much, Mr. Patterson. The last but not the least is Tino. Thank you.
Okay. Good morning, ladies and gentlemen. I think the prior speakers have actually set a good tone for what I want to speak about. I'm supposed to be talking about when do we take stock, evaluate and streamline. I think I agree with the speakers as well as the people who gave papers that the question is not whether we have too much regulation. I think we need regulation, and just because I work in the context of the capital market, there's something I always say to our trading license holders who are licensed to trade on NGX. I say to them, you need 300 million naira as your capital, your regulatory capital, to be a broker-dealer. You don't need to put that 300 million naira in a regulated entity. You can do all sorts of other profitable business in Nigeria with 300 million naira. So if you decide to take a license, then it means that you're ready to work under the constraints that licensed entities work under. And so I think any question around, should we should dial down the regulation, really depends on what are the key regulatory indicators that regulators have given themselves. And so I think one thing that regulated entities need to do is conversations like this, where they also understand, regulator, what are your own KRIs? So I have KPIs in my business. What are your KRIs? What are you trying to achieve? And once there's an understanding of what the regulator is trying to achieve, it's easier for a regulated entity to say, you know what, perhaps you can achieve that same aim this way, as opposed to the way that you think you can achieve it. As I always say to regulators, in my role, because I represent both a regulated entity, because I get a license from the SEC to do what we do at NGX Regco, but we also regulate the market. I always say to regulators, what are you trying to do? Because you sit in your office, you are not an operator, and so there are things that operators know that you don't know. So if you share what you're trying to do, if that conversation goes on, then you may be able to achieve your aims in a way that is informed and more robust, because you now have the benefit of the information from the regulated entity. So as I said, KRIs that are based on a plan. And so regulated entities in conversations like this should continue to engage regulators and insist that regulators have plans and regulators have KRIs around the issue of who is watching the regulator. I know this is a difficult conversation to have, but it's a conversation that needs to be had. So when that is done, so regulators, one of the things that I've observed is, say around filing obligations. You have a financial services holding company that has, license in insurance, a license in pension, a license in banking, and a number of licenses from the capital market. What I've never understood is why all those regulators cannot get together using smart forms to help the regulated entities to be able to say, we filed, and that satisfies everybody. It requires some effort on the part of the regulators to say, what do we need? What do all of us need? And can we somehow combine what we need, especially using technology? We now have machine learning, we have AI, we have the digital technology. It's doable if regulators want to do it, and if the appropriate conversations continue between the regulated entities and the regulators. I think that's one thing. I think regulators, obviously each regulator has a law and their sphere of influence, and so being mindful in those conversations around the sphere of influence of each regulator and using technology to help to map that sphere of influence, but still reducing the burden on the regulated entity. I think another thing is around why we should streamline is sometimes there are several overlapping regulations, or regulations where one regulator needs something in a particular format because of their own specific remit, and another regulator needs it in another format. I think we may need to sit down and actually look at some of the operational issues and procedures and policies within the financial services industry, and reduce the burden by taking decisions around that. It will require a lot of work on the side of the regulated entities, and in my experience, and I talk based on my own experience, I sometimes get the impression that regulated entities are not willing to do that, so that there's a short-sightedness. And I say this with every sense of responsibility because I'm a guest of BDAN, but I think you also want to hear from us. A short-sightedness, why do I say that? You ask regulated entities to come in for meetings. Sometimes you don't have the most senior people or the people who can make decisions at those meetings. And so, you can't make decisions at those meetings. Sometimes you ask them to send representatives for something that is beneficial for the entire community, and you don't get the representation that you need. So I think that is something that an association like BDAN, that feedback, which I know may be hurtful, but it's not given from a place of hurt, it's given from a place of experience. Why is it that sometimes when there's something to be done for the market with a regulator, we're not showing up, or we're not showing up with the most senior people or the most experienced people or those who can actually take the decisions at those meetings? So I think, when those windows are open, associations like yours should also take opportunities of those windows and help to drive the process. I think another thing is giving regulators feedback. So we have at NGX a very developed rulemaking process. And one of the things that always shocks me is that we give, depending on the type of rule, whether it's 15 days or 30 days for responses, sometimes we get 2 responses. 2. And we have about 150 listed companies. We have 180 active trading license holders. These are rules that will affect everybody. And our rule-making process actually goes to our board. And sometimes our board is saying, I want to know what the community said. And there's nothing from the community. When we now get information and feedback from the community, when we're applying the rule, I get a call. Tinu, why are you doing this? It stifles the market. Or I go somewhere, Tinu, you people have started again. So, you know, I think when those opportunities present themselves, now what I've noticed is we set up, engendered a committee of compliance officers of trading license holders. And we also set up committees within, we have a rules committee there. And so we will get information from that rules committee because we insist that we must get something from the market. So that's an opportunity, but people are not using it. My question then is not simply to say, why are they not using the opportunity? And, you know, say, you know, I've given the opportunity. It's also to look back. Is it something, are you overloading the rules? Is it something about your rulemaking procedure that is wrong? And so we continue to be open to feedback as to why we're not receiving the feedback that we would like to receive. I think finally, what I would just like to say on is that it is necessary to have consistent stakeholder engagement. Not only, and that's why I like the suggestion, I think, of the president of BDAN around the twice yearly suggestion of meetings between the chairpersons, because it's not related to a rule. It's not related, those conversations are not related to a rule. They're not necessarily related to a policy. It is just a dialogue back and forth. And that dialogue back and forth is very important. Regulators do not have the same commercial rationale or commercial sense as the operators will have. In the capital market, for example, when I'm thinking about the protection of investors, I'm thinking about systemic risk, and I'm thinking about open and transparent markets. And so when I come to a conversation, that is what is in my mind. When an operator comes to a conversation, say a listed company in the capital market, that listed company is thinking about market valuation, the benefits of listing around the cachet that it gives it, maybe even for additional funding, and is also thinking potentially about borrowing from the market when it wants to. Two totally different viewpoints. It is only in that constant conversation that my thinking can be vanished by what the market is thinking. But if we don't have that constant conversation, it doesn't happen. And so I urge organizations like yours to continue seeking that constant conversation and to take it from the regulators that are ready to give it to you. Have successes with it so that those can be examples for regulators who may be more reticent around whether that may cause regulator capture, which is a valid concern that a regulator would have. Thank you.
Thank you very much, Tinu, and thank you very much, colleagues. As I said, we will be leaving here by 2, so if you can take another 30 minutes to get feedback from participants, but we'll appreciate, one, don't repeat what somebody has said, as brief as possible, whether it's a suggestion, whether it's a question. If you want to direct your question to specific members of the panel, you are free to do so. So the floor is open. Thank you. I don't know whether I should start with the chairman. I would rather start with, oh, okay, fine, okay.
Sorry, briefly, I just want to clarify some things. Nobody is saying that banks should not pay the AMCON levy. I was one of the designers of the AMCON levy, and we envisaged 10 years. What we're asking is, let us sit down again and have a plan for when it will end and how it will end. We're not sharing our responsibilities. So I just want to clarify that. Also, the notion that the banks are benefited from AMCON more than the government is not true, because in 2010, banks' total profits in 2010 and 11 was under 100 billion. Now we're talking trillions, and the government is getting taxes from the recovery of the banking industry. Those taxes from the recovery of the banking industry, based on what AMCON did, is also a benefit to government. So let's be broad-minded about that. On the issue of NDIC, we're happy to pay NDIC premiums. The question, it's a direct question, Is there any other place in the world where banks pay NDIC premium, and when there's a bank failure, somebody else, AMCON, pays for the bank failure, which the banks have to pay for again through AMCON, and NDIC doesn't spend a penny? In the last 4 bank failures, NDIC has not contributed 1 penny to the resolution. It's been AMCON, and the banks are paying for AMCON. So I think there's a moral issue of whether that's a double levy on the banks, which we need to again sit down and discuss. We're not preferring any solution. We're not backing away from our responsibilities, but we think that we deserve a conversation, a serious one about those issues. Thank you.
First intervention. So any other intervention? Yes. Also your name and perhaps the organization you represent. Thank you.
Is it me? Good afternoon, thank you. My name's Adiba Igodaro, and I'm an independent non-executive director on the board of Standard Chartered Bank. I won't repeat, but I must say I fully agree with the concept of not over-regulation, but smart regulation. When it comes to the costs, I think it's important to look at costs clearly both from the financial aspect, but also people and time, because that's a very valuable resource to us as a bank. Now, one of the things that I hear often is the challenge of what one might call the pseudo-regulators, various bodies or institutions that are demanding time of management and executive directors to come and present on one thing or the other. I offer, and I might be a little incorrect in this, so I'd be interested in others' views, but often there are people flying to Abuja to come and spend a whole day with entities, National Assembly, talking about one thing or the other. To what extent is this a growing challenge? Is it a recognized challenge by others? I think it's one thing having the regulator. It's important to have the central bank as the regulator of the banking industry, but what about all these others? Thank you.
Good afternoon, Chairman, distinguished ladies and gentlemen. My name is Emem Bintube. I work for Jais Bank. The topic is the complex balance between regulation and compliance. It all depends. If we want to make it simple, it can be very simple, transparent. If we want to complicate it, by not being honest, transparent, and objective about it, then we'll have issues. Talking about honesty, transparency, and objectivity, my bank, Jais Bank, is built on the values of ethics, transparency, objectivity. And therefore, even our books, we try to make sure that they're very transparent and honest, and is open to all. So the soft issues that Mr. Patterson spoke about, the behavioral issues, because we try to behave that way, we don't hide anything. When we come to ratings, RBS and other things, we pay the price for it. And we know in the industry, those who don't play by those rules, and they still get away. So this is a challenge that I would like particularly the central bank and the NDIC to look at it, so that those who play by the rules are not penalized unduly. Thank you very much.
Hello, everyone. I'm Lily. I have a question from Ernst & Young. I have a question around the balance between compliance, regulations, and innovation. So how do you actually create an environment that fuels innovation while still being, and I'm all about regulating and championing compliance, but how do you strike that balance to enable an environment that is business-friendly, innovation-friendly, as well as client-centric? So I haven't heard anything around how we're actually serving our customers whilst also being compliant. So that's the first question. And my second question is around alternatives. We've talked about, SLS mentioned that we need to move away from oil and go towards non-oil. But this is a challenge to the banks. How are you actually helping and supporting moving towards CNG as an alternative? It would be great to hear some insights around that. Thank you.
Yes, there's a question. Can we take one question from our online viewers? There's one here from Mrs. Taba Peterside. She joined via Zoom. She said, there used to be a body called the Financial Services Regulatory Coordinating Committee. Does this still exist? This is in regards to the issue being raised by Tinuade Awe, reducing regulatory burden.
Thank you very much. And I believe the MD of NDS would also take the issue of FSRCC. So maybe we'll start with you and then
Okay, thank you very much. I think these are very valid questions. To start with, the issue of contribution of NDIC when there is systemic failure. I need to mention that, like I said at the beginning, deposit insurance is being practiced in about 95 countries around the world. And deposit insurance as a safety net arrangement is not designed to address systemic failure or systemic crisis. And I think that is why His Royal Highness, when he was making his remarks, alluded to the fact that there is the need to allow the central bank to continue to regulate and supervise banks, so that when there is systemic crisis, it's only the central bank or the treasury that can come in and bail the system. Deposit insurance is meant to address pockets of failures here and there within the system. And if there is run on, to protect banks from run by assuring depositors that, look, if there is any failure, deposit insurer is there to pay or to reimburse the depositors the insured amount. At least that will give them comfort not to run on healthy banks, thinking that the bank that has failed, the healthy banks are equally going to fail following the failure of those banks. Yes, I agree with you. The issue of contribution, you understand what our NDIC is contributing, or how is NDIC assisting banks. NDIC has a framework for financial and technical assistance to banks that are in need. But over the years, some of the conditions that are in the framework have made it difficult for banks to access it. And as we speak, the NDIC is reviewing that framework to make it more accessible so that they can contribute, they can assist banks, either technically or otherwise, that are in need for that. Because we realize that, look, we need to complement the efforts of the central bank. It's not all the time the central bank will be expected to bring in high-powered money to assist banks. We only need to reserve that when there is systemic crisis. That's when the central bank needs to come in order to address it. On the issue of the Financial Services Regulation Coordinating Committee, yes, as you all know, we have multiple regulators within the financial system. And this forum of Financial Services Regulation Coordinating Committee is a forum whereby all the regulators within the financial system meet on a regular basis, on quarterly basis, to deliberate on issues in order to eliminate duplication, share information, eliminate regulatory arbitrage that may happen. And we're actually collaborating to make sure that we don't duplicate requests to regulated institutions. Even if you start with the banking system, you discover that the central bank and the NDIC, that level of coordination, when it comes to examination is done jointly. So it's not a situation whereby CBN will go and examine, pull out, then NDIC will go and examine, thereby disrupting the activities of the institutions. Examinations are conducted jointly. If you look at the returns that is being submitted, in the past, before the automation of the return submission, banks submit returns to NDIC, submit also similar returns in hard copies to CBN. But now it has been automated. As we kick the button to submit the return drops in both NDIC and CBN, thereby saving the banks the time the resources to duplicate efforts in trying to get the returns across to the institutions. So that forum or that agency committee of all regulators is there, and it meets on a regular basis. Issues are discussed on how to address it without necessarily compounding issues on the operators. I don't know that I've answered the question. Thank you.
I'm not sure anything is directed at me, but I want to speak to what the independent director at Standard Chartered Bank said in terms of the cost, the burden on management, the board, and all that, expecting you to come for meetings. Like the Emir said, yeah, board work is not easy, it's very demanding. You need to ask yourself and convince yourself from day one, is this something you would really want to do? Would you give it your time? So if it is, then you have to find a way to lend your time to it. Then demanding you to come for a meeting maybe from Lagos, how frequent are those meetings? Is this something you can do via technology, if that's what you're talking about? Is not? Okay. So I guess those are the things I had. The other ones are what my elder brother talked about in terms of, I think we are partners in progress. Those issues can be discussed. It's not as if we are disagreeing on any of those things. What I'm saying is that somehow we find a way to pay the cost. The banks have also made enormous contribution to the economy in terms of contribution to the task. I take that view, and that is valid, but the point remains that we can still engage and see how we can find ourselves out of the crisis and the cost it has also imposed on banks. Thank you.
Thank you. Sorry, Patterson, would you want to discuss the pseudo-regulators? I believe these are not the mainstream regulators, and what can we do to have that protection, either by the mainstream regulators or by whatever system we need, and particularly given the fact that you are coming from a private sector. The second issue that what are those incentives that we needed for those who comply, basically, and subsequently then I will discuss with the team. Thank you.
Yeah, I think I would like to start from where the chairman of Jais Bank, and I think I give you kudos, sir, for having the courage to bring up this issue. The problem, sir, is corruption. That's the problem, corruption. It's unfortunate, but that is what the perception out there is. Nigeria is mapped out in the global map as a corrupt country. And are we doing enough to take that toga off our head? Well, the jury is out there. But the truth of the matter is that if you operate in a corrupt environment, you have the kind of thing you're talking about, sir. Because corruption is not only on one side. There's corruption in the private sector, there's corruption in the public sector. So I have, my 31 years in banking, I have experienced some of these things you're saying. And the only way we can solve it, like I said, is to pay more emphasis, or let's say pay less emphasis on the hard rules, and then put more emphasis on coming up with regulation that will deal with our behavior. And then let there be consequences. If there are consequences, and we all know, and we have countries today, even in Africa, where the president of a country is called to order and he appears. Can that happen in Nigeria? So until we get to that point, those kind of problems will not go away. And so in that instance, we should be talking more of integrity compliance. where we look for opportunities to incentivize the system, create opportunities to let people understand that there is benefit in doing business the right way. So incentivizing the system should be the way to go now more than carrying always hard rule, regulatory stick all over the place. I don't know how many times we've seen in the public where we've had people being congratulated or awarded for, showing up the kind of posture you just said here now. We hardly hear it, but it's happening. So we should get people to understand that they can still do business and make money, even tons of money, while still doing it with a lot of integrity. That needs to happen more. And I think there's a body called SIPE that trained us recently, Center for Investment Private. Yeah, and that they are pushing that kind of discussion. So I think that is the way to go, right? Okay. Now, on the issue of the other issues was on the regulatory. I want to address the issue that on cost first. The issue on cost. Pseudo regulators. Let me address the issue of cost. You see, the cost, most times we look at costs from Naira and Kobo, dollars, right? Have we ever thought of the cost we face when we don't comply, leading to loss of our reputation? Where you will not have your business anymore simply because you have not complied. But you see, cost is a critical part of business. So the cost of our time, I agree with you, madam, is very critical. But you see, we need to look at how the entire system works, not only from one side. If you go to the regulators, they will also say they also need their time for other things. So, but we have to look at it from an holistic community approach. How much effort are we all putting to drive compliance? Simple rules as even road traffic, not beating the red lights. How many of us will stand by and watch people break the traffic rules and just walk past without intervening? If you intervene, you're spending your time to intervene. So it's a sacrifice we all have to pay. So compliance is not cheap. Sometimes it requires sacrifice. So that's my talk on that. On the pseudo regulators, well, you see, I came from a background where we were always supporting self-regulation, just like Mr. Efobi talked about. Self-regulation should be encouraged. Like BIDAN, for example, can be a strong body that can actually regulate itself. You can get to such a point where the regulators will rely on you so much. It has happened, like the Wolfsburg Principles came from a group of banks who came together and set up a regulation for themselves that was now globally accepted, right? So if we can all go that way and make ourselves accountable to ourselves within our small circles, then it will blossom into what the regulators will accept as your own way of regulating your industry. I think that is what I can say on that.
Sorry, moderators. Chairman.
Okay. So on the issue of pseudo regulators, I think I understand exactly what she's saying. Because I just actually was involved in a response yesterday to a request around some of the work that we had done. And those requests come relatively often. But I think we live in a country where people are always concerned that they may need somebody in the future. And because they're careful to protect that future, because we still have a lot of cult around personalities as opposed to around process, people refuse to take a stand against things that they know are not lawful. So we need to come to that point. Some of these requests, when you read the law, there's no basis for them. But nobody is ready on their own to bail the cat because of what is potentially in front. So it's a choice that we have to make if we want to live in this country. Do we want to, I don't think it's advisable for one entity to take it on, but an organization like BDAN can take it on and engage with some of these entities that make the requests. Because the requests are made and then nothing often comes out of it. Sometimes it goes on, but after a while you don't hear anything. So that's a problem. I think the other issue that I want to comment on is the one about from the gentleman from Jaiz Bank. I think as a regulator, it's a bit difficult for you to hold out and pat one of the regulated entities on the back. We have a trust problem, and we don't like talking about it. A lot of the time, it's difficult to trust because of things that are hidden from regulators. And these are conversations that we have to have. And so if I know that, okay, today the accounts look fine and everything, but I'm not sure whether there is a second set of accounts, it's difficult for me to put my name out and say, I'm going to put an award and say whatever of the year. I don't want to say an industry. Whoever, financial services X of the year. Because there are people looking at me and saying, this regulator doesn't know anything because I know X or Y. We know that it is happening. So we can either decide we want to clean up and have these conversations or not. So no, I don't think any regulator in Nigeria is likely to give you a stamp of approval because most regulators are concerned about what may be that they are not seeing. And you are not an operator in the business, so you are not going to see everything. And there have been so many shocks that you have to be prudent and wise. So what happens is there are organizations, such as, for example, the IOD. I know that the IOD does for listed companies, they do a most compliant listed company. It's an IOD event. We're not involved in that event. And so the IOD has its own processes for doing that. So I think that organizations like BDAN can also engage with such independent entities that have a good reputation and, ask for those kinds of awards, those kinds of recognitions to be done. And then, it then becomes something that there's an aspiration to get. But I think at the current stage of regulation, from the little I know as the head of a self-regulatory organization, if I heard that a regulator was doing that, I would be very shocked. Thank you.
Let me take, sorry, I think we didn't answer the question from the lady from behind there. So let me just address that. I think we had mentioned, even Mr. Efobu mentioned this during his remarks, how we can deal with the issue of balancing innovation with regulation. I think the key thing is to apply the agile approach. And what do I mean by the agile approach? The regulators and the innovators must always start from at the same time. Where you start getting pushback is when the innovators are out there doing their thing. When they want to go to market, that's when they now come to the regulator. The regulator says, wait a minute, let me see what you're doing. And then there's an agitation. Oh, you're wasting time, And so it's always good to have what we call something like the regulatory sandbox, which I think the central bank has today. So we need to make good use of it. When you have an innovation, you take it to them. They will set up the system together with you and create the environment and see how it performs. And right there, both the innovator and the regulator will agree together what needs to be done to address the issues that may arise from that particular innovation. That way you arrive at your destination at the same time. So the agile approach is what we will need. And our advice that for banks, always have what we call the DevOps desk, where you have your IT people, your compliance team, your operations team, your marketing team, your product team, all sit together in a room and agree on any innovation that is coming out before you even roll out to the central bank. That way, you reduce the issues around innovation and the regulatory problems.
Okay, that's fine. Okay. Sorry, we are not, when we are talking about the soft issues, we are not saying we need a pat on the back at all. What we are saying is we need fair treatment. You know, let me be specific, NPLs, treatment of NPLs. You know, some banks manage and massage their NPLs. And some of us, we decided to report everything we have. And then, you know, they get away with, you know, this kind of thing. So what we are saying is, how shall we, you know, we are not looking, you know, that we should pat it on the back, but how are we sure that it is very fair and transparent process? Thank you.
Let me say it this way, that there is always incentive for compliance. When you comply, genuinely comply, the tendency is that your institution is going to be more resilient, more safe and sound. Customers, especially institutional customers, are going to recognize that because they have the capacity to determine whether you are actually genuinely compliant or not, because it will be there in the records. And when you have more customers, it will also translate into more adding to the bottom line and thereby enhancing your shareholders' return. I am not sure the charge that treatment of NPLs between one bank to the other is not the same. I'm not sure that is correct, because the central bank has issued the prudential guideline that is being used in assessing credit. And for you to make a charge that between one bank and another there are different treatment is only when you look at the two, because in the prudential guideline there are two criteria in determining, in assessing credit. There is the objective and there is subjective criteria, and the two are being used at the same time to appraise any credit. So it will be difficult for someone who has not visited a bank, looking at the credit file or looking at the credit transaction, to be able to say, no, this ought to have been classified like this other than this. It is only when you are there that you review the records and engage the operators, you understand, to get more information, that you come to a conclusion that, yes, this is how this credit is going to be classified based on the provisions of prudential guideline. Thank you.
My attention is drawn to the fact, yes, I'll come back to MD. My attention has been drawn to the fact that we only have 5 minutes. So with the permission of the chair, we'll take additional 5 minutes. If you not mind, we'll take 2 additional questions, maybe 3, 2 from there and then 1 from the front. So, yes, sir. Yes, thank you.
Thank you, Mr. Chairman. My name is Oladele Michael. I'm the Director of Bank Examination Department, NDIC. I thought I should make 1 or 2 comments. One, that I want, by way of suggestion in future, this kind of topic should have thematic presentation so that the issues can be put in context instead of a broad presentation. Now, having said that, as a supervisor, I've been searching my mind and I haven't found over-regulation anywhere. And that's the truth. If there's anything, I think we have been fairly dynamic. And so what that suggests to me is that maybe to a large extent, members of BIDAN may not be apprised to the process of, churning out some of these regulations, because there are so many drivers to it. Some of them are internal micro, some of them are because of macro-prudential consideration. And each regulation is subjected to, Mr. Ifobi is here, who can speak to that more than I do, Each regulation is subjected to impact analysis, and you have tools to moderate it along the line. And that's why when you see my MD has spoken to the issue of prudential guideline, even we have tools that we use to moderate it, consistent with the direction of the economy. When there are shocks, you want to apply, a tool like forbearance. And so the chairman of Jais Bank, maybe his bank has not presented that. So you might see a bank that thought, okay, fine, because of the need for an obligor to time out his stress, having regard to economic cycle, okay, you present to regulator and it can be considered for forbearance. I think we have used that a lot since 2019 to ensure that we do not, unwittingly, create shock for the system. Now, to the issue of, collaboration with BIDAN, it's apt, but I think more importantly, those of you who are chairmen of banks, it is important for you to ensure that you put in place processes that will prevent crowding out of yourselves by the executive management of those banks. Because I do know that we have robust processes of, engaging with MDs of banks at the bankers committee level, and etc. And even during when we have, do assessment of your banks. So the question is that your process, does it allow them or prevent them from crowding you out? I think you need to look at that. So because if you do that, you may discover that a lot of things, regulation and all of that, they are usually strong discussion and consultation around them. And that's why at times, because of those consultations, you may have to consider certain tools to moderate, because you cannot be changing some of these regulations, on daily basis. I thought I should mention this. Thank you very much.
Thank you. The gentleman at the end, thank you.
Thank you. My name is Olufemi Agbasanwa. I'm from Sterling Currency. With regards compliance and regulation, we know it's a game of cat and mouse. Regulation follows innovation, so there cannot be too much regulation. It's an evolving process. Now, from a multi-jurisdictional standpoint, we are also regulated by the FCA in England. And as an IMTO in Nigeria as well, we're having real difficulties doing transactions with banks because we get pulled by our regulators all the time. Now, the point is, how do we get to the point where we're able to bring our regulations, especially when it comes to Nigerian banks, up to speed with international standard? Now, sir, you also mentioned FATF and the 2007 effect of compliance with FATF earlier. Now, February this year, FATF put Nigeria on a high risk, and that really has impacted the ability to flow funds into Nigeria. I think there was a review in June, and that responsibility, unfortunately, was kicked down, the can was kicked down the road. So how do we address issues like that? Then also, it is a bit concerning because Nigeria, from my own perspective, I'll say, we've got our BVA, we have quite a lot of data capture that can actually help our KYCs. But it doesn't seem like we're tapping into this, and how can we address that? And finally, I would also like to hear what your take is when it comes to shared KYC. Now, I know that in the industry today, there's talk about banks sharing KYC, so there's a single source of KYC for each bank customers. I'd like to hear what your take is on that. And also, sorry, lastly, and also your take on AI as a tool for transaction monitoring, which I believe is one of the things that is lacking in our banking services today. Thank you.
Thank you very much. My name is Nneka Onyalikpe, MD Fidelity Bank. My question is for the MD of NDIC. I'm sure you know that we've had to pay as banks, we've had to sterilize almost 62% of our deposits, 60.5%, 30 being for liquidity and then 32.5 for CRR. And quite curiously, we still have to pay insurance on it again, on the total deposits. So I'm wondering if this is not a double insurance, so to speak, because we are made to understand that the liquidity ratios and the CRR will have to comply with to take care of, to be a buffer for unseen circumstances that may arise in the operations of our business. Now we have to pay insurance again for it, even though it's risk-based. But I'm just wondering if we shouldn't, first of all, take out 62% of it and now pay on the balance. Just because I don't know when else I can catch you, sir. Thank you.
Very much. I think the beauty of this is that this is a forum that we should express our views. And I think this provides that opportunity, and it should be looked at it from that perspective. Thank you.
Okay, thank you. Yes, we all know that as a bank, when you take deposit on the liability side, you apply it, you see it on the asset side, either as cash, as balance with CBN, CRR, or securities, or risk assets, or whatever. That is how you apply it. Like I said at the beginning, based on best practice, cost of deposit insurance is borne by banks or member banks. And we charge it against deposit, not against how the deposit is deployed. And that is best practice, and that is what is done everywhere. Because we cannot begin to say, okay, how did you deploy the deposit? Is the deposit in CRR? Is it in securities that you bought in order to meet liquidity ratio? Or is it a risk asset? No, which is risky. You understand? We are not looking at how you deploy the asset, because the idea is, the only thing that we exempt are deposits that are statutorily exempted. So those ones are removed. So the base is the deposit, not how the deposit is applied. Because when you talk of CRR, liquidity ratio, you are talking about the application of the deposit you have taken from customers. So it's not from that angle, but it's from the liability side that you have taken. So that's what is used in arriving at the premium. Like I said, you can actually manage the premium you paid, since we have adopted a differential premium assessment. All you need to do is to look at what are those things that you need to put in place. 5 billion is quite a significant amount of money. You can give it as a target that, look, you have to bring down our premium by so much. And it should be a target to the MD or to the financial controller, whoever, you understand? And that is how you bring down this, but not to begin to look at it from the other side. Thank you.
Thank you. CR, I will explain that. Don't bother. I will you mean CRR and other related costs? Yes. 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 Yes, has been sterilized. We'll discuss that. We'll discuss that. We'll to conclude, if you not mind, I'll just make some few comments and to also express appreciation. Sorry? No, I think we agreed to. No, we have agreed to. No, okay, sorry. No, I'll comment on that. Basically. Okay. Just a minute. I think time is not on our side. One thing we've agreed, we must start engagement. And honestly, this forum is a forum that perhaps the association should start to engage the various regulators, and I'm happy they are represented here. We should give them opportunity. Even if it means it's an annual event, if you can't have it twice in a year, let's do that. And of course, consultation has been emphasized. Khalifa Sanusi has done that. The CMD has done that. The representative of Governor of Central Bank has done that. So that consultative forum, stakeholder engagement should be a priority. We've also agreed that we need to take stock. We need to streamline and overlapping regulations and various data requests. Now, as an alternative to data requests was the suggestion that perhaps we need to start looking at something similar to the EFAS which NDIC and Central Bank are using. Can that be extended to have a more centralized data system that if I send information to NDIC, I can also click another button and send it to perhaps the NGX or something like that. And I think Tinu made reference to that. We also need to accept that consultation means participation. The argument that has been put forward, and that has been the dilemma of most regulators, is that you send out a draft regulation, nobody responds. That's exactly what Tinu said, and that's exactly what the ND of NDIC said. So the senior management must be involved. They must be involved, and there's nothing wrong. Okay, you're invited to a forum, consultative forum, you decided to send perhaps a compliance officer, or maybe nobody has even been sent. So it is important that if you want a feedback, then, and if you want a smart regulation, you must be active in drafting and ensuring that that regulation comes on board. The other issue was on the fact that there are certain international obligations and regulations that we need to comply. And if you are not careful, we may even be delisted. What are we doing about it? And we need to do something about it. So I'm happy Central Bank, NDIC, NGX is here, and other regulators are here. Please, let's work with the other regulators to ensure that. How do we share identity? Because that was also made known, that there is a big challenge in trying to get identity and also KYC. I've obtained KYC on Mr. M.K. Ahmed. So if he goes to another institution or goes to another sector, the same information is being obtained. How do you share that? It's a bit challenging, but it's something that we also need to put on the table. How do you use AI as a tool for transaction monitoring? I think this is something that we need to do. Cost has been raised, costs has continued to be raised, and particularly the issue of CRR and other regulatory issues. Perhaps we need to hold that discussions. So I believe a number of issues have been raised. And for me, the most important thing is to reflect on the fact that, one, Lamido Sanusi made reference to the fact that central bank independence must be protected. For some of us who have been regulators, we know why. In developing countries, you need a strong institution. Nigeria is a bank-based financial services industry. In other words, a substantial part of financial assets are held by banks. So to that extent, you need to have that. And with a lot of pseudo-regulators, honestly, you need a very strong institution. Regulators must also assist operators in terms of addressing pseudo-regulators. And the regulators basically that are being referred to are those from other arms of government. You know, you are invited almost on a daily basis to explain one thing or the other. Why can't Central Bank and NDIC provide that forum? If it's an information they require, that information is available. Can that be provided? Why should different committees be inviting individuals? Can they harmonize their position? There is a cost involved, and basically, and I believe these are the issues that have been listed. So I think, distinguished ladies and gentlemen, once again, thank you very much for the opportunity, and we also apologize for starting our event late, but I believe it is worthwhile. Of course, most of the VIPs could not stay, which is understandable. And also to commend the Minister of Finance. He had virtually attended every meeting that has been invited. I think this is commendable. Some of them, and I think we should clap for him, honestly, because some of them don't even care to attend. And I think it's important. We need to encourage Nigerians. This is an initiative. All of us believe this is a government that must be supported, This is a government that means business. Private sector has a lot of confidence in this government. And therefore, collectively, government functionaries must work together to see how we can work. And whether we like it or not, market discipline is the best discipline. As regulators, we are just third party or second party. But risk management, risk assessment, risk compliance are issues that we need to focus on. So once again, distinguished ladies and gentlemen, thank you very much. We are basically 12 minutes late, but I think it has been a worthwhile exercise. Thank you and God bless.
All right, thank you very much, panelists, Mr. Moderator, thank you so much. Please, I'd like to invite the chairman, board of directors quickly, Mr. Farr, on stage for a group photograph. Thank you, sir. Please, can the board members please join us on stage quickly? Board members. Quickly. Thank you very much. Thank you very much. Please, I'll need every one of you, delegates, distinguished ladies and gentlemen, I need every one of you to clap for yourselves. I know it's not been easy staying here from 10 till about this time. Thank you so much. At this juncture, I'd like to call on Alhaji Mohammed Datiola for the closing remark.
I think it's a vote of thanks. So please permit me to stand on existing protocols. On behalf of the Board Directors Association of Nigeria, I would like to thank most sincerely all our distinguished guest speakers who have added value to this maiden occasion. So like the chairman of the panel has said, I think this is a good beginning where the bank directors will engage the regulators so that together we can push the industry to the right direction and what will be in the best interest of the Nigerian economy. So on behalf of all of us on the board of Biden, I wish to also thank the panelists that really discuss all the pertinent issues that will assist us in running the bank's boards. So on this note, I wish to thank all of you and to wish you a safe journey back to your respective home. Thank you.
Thank you very much, sir. Please, lunch is served upstairs. The ushers will direct you upstairs for lunch. Thank you so much.